TJ the Wheel here coming at you live with another episode of Wheelers. This is my favorite segment of the week on this channel. So we get together with a couple of other either experienced wheelers or aspiring wheelers, and we essentially talk about selling puts, selling calls, collecting premium, rolling when it makes dollars and cents. We got Bill White, we've got a new gentleman to the channel, Samir, and then we've got Martial Law Media. How are you guys doing tonight?
Fantastic.
Good.
Thanks.
Awesome. Let's start with you, Bill. How's your week going? How's everything going? And then we'll just kind of introduce everybody and go from there.
Week's going well. I think we talked on the phone earlier. You closed out a lot of positions. I did as well. So we're kind of looking how to deploy the cash in an up market. I think it's an important lesson for everyone to learn, and just how to compound your gains over time, even if it means sometimes accepting that they might be a little bit smaller. So I'm also in the market for some new trades. So if anyone has any good ideas, put it in the chat, because I'd like to pull them up.
Well, we're going to have the $1 million cash grab segment. So hopefully all the ideas start flowing. Samir, tell us a little bit about yourself, how long you've been following the channel, and what are you hoping to get out of the episode tonight?
Thanks, TJ, for letting me in. I've been following for almost a few months now. I started with Amit as I saw you one of the Friday sessions, and I was like, it lit my eyes. I'm like, okay, I can do this thing. I can learn from TJ. And congratulations for your 10 million. I've been following 8 million and the 9th million. I'm like, 10th million was super fast. I'm like, oh my God, right? It's a dream portfolio. So thank you for sharing the knowledge so honestly and openly. And I'm looking forward to learn more, especially the covered calls that are under the water, trying to figure out how to navigate the system. Yeah.
We got our scuba gear ready, man, and we're gonna go rescue these things. They might be out there in the bottom of the ocean with the Titanic, so we're gonna have to be careful. A lot of pressure down there. We don't want to blow up like that submarine from a year or two ago.
Yeah.
Anyway, Martial Law Media, what a cool little name there. Tell us a little bit about yourself and how you stumbled upon the channel and what you're hoping to get from the episode tonight.
Yeah, thanks for having me. Similar to Samir, I found you through Amit, who I started following through the advice of some friends back in late July, early August. I've been a money manager for 8 years, so I work for an independent firm, and I never really felt like I had any value to offer my clients. Traditionally they want you to invest in firm models, ETF, mutual fund strategy, whatever they got, and I did that and just kind of aggregated assets like everybody else. And I met a partner who had been trading options for 35 years at the beginning of this year at my firm, and him and I have really been kind of hitting it off. And so I was right in the throes of studying when I found you, learning about options, and I've been able to add significant value for the limited amount of clients that I have. I manage about 28, $30 million, something like that. And have been able to, like I said, really just kind of add a lot of value through trading. And so I'm learning like everybody else. And, we have a great little team where we identify stocks, we do technical analysis, fundamental analysis, and, just kind of bring those ideas up. So my most recent one was yesterday. I asked everybody what they thought about Dutch Brothers. Been looking at that stock for a number of weeks, comparing it to Starbucks, and we decided to go in yesterday. And the move that I like the most is buying the position and then doing a strangle with covered calls. If it dictates that, owning the position. And so, unfortunately, I guess I sold my covered calls a little bit low. They're at 41. So with the stock right there and after hours trading, probably have to roll that. But this is exciting, and it's really fun to not only add value and be very active in the trading for clients and ourselves. So I'm just trying to learn like everybody else and having a great time doing it.
That is too awesome. You said you managed some money as well?
Yes, sir. Yep.
How long you been doing that?
8 years.
Very cool. So you have a lot more experience than I do.
Yeah, when you said that you were looking to start a hedge fund, I was hoping to talk to you. I have a lot of people that I work with. One of them We don't use IBKR for our clearing, but I'm actually personal friends with the lawyer who originally started the company, and he's always trying to get me over, telling me how inexpensive it is to start a hedge fund with them. They can do it now for around $10,000 or less, which
Right.
traditionally it used to cost just a lot of money to be able to go out and have these options. So, I love that about modern trading, financial Twitter, financial X, whatever you want to call it, is that all these options are becoming more within reach for everybody, no matter what you want to do. So I know there's a little bit of pushback on kind of managers and charging fees, but not everybody has the time and expertise to do this. Some people have the expertise, but they don't have the time. Some people, they just want to allocate their time differently. And I think that, I want to be there for kind of everybody, and using these tips that I've learned primarily through you have really been a game changer for me in my practice.
Appreciate you. Yeah, so I launched a hedge fund, and I used a company out of Houston, Texas, technically Webster. It's outside of Houston, and it was like a turnkey thing. Paid, I think, at the end of the day, it was about $12,500.
Okay.
They did everything from the private placement memorandum, the whole enchilada, everything. It was really, really awesome. We got somebody else that joined in. And I went through that process, but it was $5 million. I got 5 people to give me $1 million each, and then they did all the general partners, limited partners, set it up through the brokerage, use third parties to do the books, because these the investors were getting paid a dividend every 3 months based on how well the fund did. And then normally it's the 220, right, for a hedge fund manager. But
Sure.
since I was just getting started, I was like, dude, I was like essentially begging people to give me the money, give me the shot. I was like, I just want 10% of all the money that we make you, and we're going to use a third party audit to make sure that we all agree that I made you the fucking money. And I doubled the 5, and then I doubled it again.
Wow.
And that all happened in less than 3 years.
Wow.
And that was my big head start in life financially.
That's amazing.
Like, dude, this is crazy, yo. So then now I'm like, so they talked to me about like these waterfall strategies and how to set up the next one. So it's like, so you can get a certain amount of money, or you can get your little management fee. I don't have a management fee. I get paid based on the premium collected. That's why I'm real big on cash flow.
Sure.
And then once I hit a certain amount of doubles, I actually qualify for as much as 50% of the profits.
Wow, that's great.
We're officially partners, but I've already doubled your money 4 times, so nobody gives a shit at that point. So I'm just saying, so I've set myself up to really, really win if I help them win. Because the one thing that I told myself is I'm not going to help a bunch of rich fucks get richer, and I didn't get rich along the way. That was like my own personal little motto, because I knew that I was going to be successful to do it with this strategy. I saw it, bro. I saw it. And I was like, but I'm on the come up. A lot of the people that I'm going to go attract money from, they don't even need this to work. This is just like a gamble that they want to take for their endorphins and their adrenaline. But for me, it was everything. So I was going to put my heart and soul into the thing. So I just learned about the waterfall strategy, and I'm implementing it for sure on the bigger hedge fund.
That's a great strategy. I've always wanted to participate a little bit more in the upside, because
Yeah.
as you know, this is a very active game.
Yeah.
The only reason this works for me, I'm on the West Coast here. I'm in right outside of Lake Tahoe, and
Okay.
on the Nevada side, so no state income tax. And we're in the office every day. It's 6 o'clock. We're on the computer at 6:30. We're there at least until 1, and we're making trades and doing things. And I'm limited to the fees or the commissions, and not to get greedy about it. It's just that these are really, really labor intensive in terms of making these trades, doing the research, and doing all these things. So that's great that you figured out a way to participate at a higher level.
Yeah, it was actually I got the idea from one of the subscribers. And then I started putting everything together because a lot of the paperwork's already done for the big hedge fund.
Sure.
Dude, and then just getting the people like okay with it, like the prospective investors, bro, they don't give a shit because they're just seeing that I've already doubled their money 3 times, and then on the 4th one, now we're in bed together. You know what I'm saying?
Absolutely.
Because I'm not gonna keep making you money, yo, and then I'm over here like I'm getting peanuts compared to the money that I make you guys, and I do all the fucking work.
Yep.
And especially when I have my own capital, it's like you got to really incentivize me to want to wheel your capital. And that's the thing that people don't also realize is whenever you legit do this for a living and have success doing it, what's my incentive to do it with somebody else's capital? To make them a lot of money and me a little, and me stay up all fucking night trying to figure out scramble, with these cover calls that we'll talk about in a little bit. No, you gotta be fucked up. You know what I'm saying?
For sure.
I ain't doing it, dude. I don't have to do it. I won't put myself in that situation. Not gonna do it. Anyway, we'll talk a little bit more. We're gonna keep the course going. What's going on, Santosh? Tawan, Matt, I probably screwed that up. I'm sorry.
Hi, how are you?
I'm well.
Yeah, nice to see you. Nice to see you, all of you. I hope all of you are enjoying Trump. He's going to be a next president. So yeah, market is bullish, and we made a lot of good money after he's elected as a president.
Absolutely. How long have you been following the channel? How do you say it? Santosh?
Yeah, Santosh. Yeah.
Santosh?
Yeah, I'm in Boston, so near to Boston. So yeah, so Will, I'm following you maybe almost a month or more than that. So I'm very thankful to you. I'm keep reading your tweets, access, and it's very helpful. To be honest, it's really helpful. Sometime I copied your trade as well. The option selling, especially.
Peter.
These are really helpful. Yeah. So yeah, thank you very much.
That's awesome. Well, guys, let's get started with it. That's the intro section. Now I'm going to put over here the 12-minute mark. And we're going to get into the seminar recap, if you will. So, seminar recap. So on Saturday, I had this idea that I was going to go live on YouTube for 3 hours and bore myself to tears, but hopefully give out some pretty good information for folks, mostly the new folks. And I wanted to go give people the A to Z on, it's on my feed, sorry. The A to Z on wheeling, from my perspective, treating it as a business, the mindset, everything. So I feel like I set the table and I gave them a meal, but it wasn't super filling, and that was intentional. It was a beginner's seminar from the standpoint of you got to really understand how to structure it as a business. And you got to have the right mindset and so on and so forth. So I put all these slides together. Alex put the slides together. I gave him the idea. I'm an idea guy. You ask me to do anything, I'll give you a badass idea. Ask me to execute, we're fucked. It ain't gonna happen. You know what I mean? Like, I give you the idea, but I need you to figure it out because I'm not that nerdy. I did a slideshow one time a couple years ago. Did it? It was a joke. I'm not. That's just not my thing. So anyway, Alex made it pretty cool. We had watermarks and shit with the Wheel Deal logo and stuff, and it was real cool. But now I want to add like 10 to 15 slides to that one for part 2. And my vision is, okay, we have it, all things cash secured put, but let's talk about the various trades and why I take this cash secured put. What's the goal with this cash secured put from the beginning? Is it just a cash grab? Am I legit trying to own more shares? That's why I'm going to go with the 40 delta versus the 20, and just more repetition. Like, the idea is I want to go through a bunch of repetitions so you start seeing these things when you have the 200-day moving average, the 50-day moving average, your Bollinger Band on there, you're looking at your RSI right away. It's so easy to see whether or not it's a good setup or it isn't a good setup for your situation. If you're just trying to own the shares, you don't even need to look at any of that stuff. You can just look at the delta. Be like, I'm just going to go as close to the money as possible because it's already in my buy zone. Now I just want to maximize the amount of premiums that I bring through the door because I'm okay owning the shares. If I don't get to own the shares, well, at least I got maximum payday. Kind of like what I'm doing with these cash grab segments on Riot. I picked the strike price that was pretty aggressive because, more importantly than the entry point, because I knew that I was going to roll down if I was wrong, is let me bring adequate premium through the door so that this portion of the portfolio is overperforming from a premium collection perspective. So that's the kind of stuff that I want to get into the weeds now. It's like, okay, now you have your business set up, you found your 5, etc. How do we really manufacture the win, and what does that win look like for you? Because a lot of times people need to define what the win is. And then you need to reverse engineer on how to get there, because you got $1 million portfolio and your goal is just to double it. Hell, you might just be better off buying a bunch of SoFi and Riot at the right prices and kicking back for a year or two and do nothing. That might be your fastest double. But if not only doubling is important, but you need to extract a certain amount of cash flow from the portfolio, that's a different business model. So you got to really decide what is your hamburger stand? What kind of cash flow do you need? Or how soon are you trying to get this double? And then you need to put the right menu items in place for that to work, if that makes sense for you. So that's the kind of stuff that I really want to talk about. All things cash puts, when it's a cash grab, etc. How to manage each trade, how to manage the cover calls. And then, talk about the button-up strategy, like when to buy leaves, when's an ideal time to buy the leaves, because you don't want to do it when it's super high IB, because you're the one paying premium. You're not collecting premium. You're collecting premium, you want higher IB, because that's going to be more premium. But when you're paying it, you want lower IB, theoretically. Some of these stocks will never give that to you, though. So it's real hard to buy leaves on Riot. Because, man, you're like, shit, that break-even's kind of high. You know what I'm saying? Because I paid a lot of premium for it. So I'm going to talk about all of those things. Like, why is SoFi set up the way that it is? Why was the Palantir trade set up the way that it is? Why did I set it to PayPal accordingly, etc.? That way y'all can start really seeing the portfolio and the way that I set it up through my eyes. And then you need to set your portfolio up accordingly with your vision, your goals, your ideas, your objectives. Because at the end of the day, it is such a personalized thing. Like, investing is so personal to you. You can't, and Bill's not going to set up his portfolio exactly like mine. He has different needs than I do. He has different goals and objectives than I do. And I think that's a mistake that a lot of people tend to make early on. And often, if you're just a hodler, then there's not a whole lot of strategy you got to think about. You're just share accumulation. That's it. That's your game. You have another source of income. Good for you. God bless you. Your shit's no-brainer investing. You're going to get wealthy. Just stay in the game long enough. But people like myself and Bill, who's aspiring to do this full-time one day, we have similar hamburger stands, but they're run a lot differently because we need to yield different results. So that's why you have to be real careful with the kind of information that you have coming through your ears. So anyway, sorry, I've got to send the link to Dallas Matthew. So anyway, that's my idea for part 2. What do you think, Bill?
I like it. I think just kind of diving deeper into kind of the main buckets that you talked about the other day, because that's really where the money's made. It's really easy to, there's a lot of videos out there we can just, watch on covered calls or selling cash secured puts. But to be honest with you, unless you're doing it and unless you're going through the challenges, like what Samir was just talking about with his covered calls, unless you're having to deal with those issues, you're never going to get better at it. You're never going to work yourself out of them, and you're never going to, grow as a wheeler. So, the nitty gritty details are what I consider most important for making this a real business and living off of the cash flow.
Absolutely. So I was, on Saturday, guys, I was talking to somebody who aspires to do this full time. Somebody who aspires to maybe just bring some money through the door in a consistent fashion. Someone that could wrap their mind around a strategy, and he's like, hey, I don't have to be that good at picking the bottom. I don't have to be that good at picking the top. The margin of safety that I get with the premium coming in, that's my magical eraser, right? That's kind of who I was talking to. But then now in part 2, I want to talk to the person that's like, hey, I got a pretty sizable account, or I have a way of how I'm going to build a sizable account. Now I want to go get big knowledge, because this could legitimately be something that I do 3 to 5 to 10 hours a week, have a lot of time for my family, and do other things that I'm interested in. Because the beautiful thing about this strategy, guys, once you really figure it out, you don't have to hypnotize the screen. Because if you're legitimately in high conviction plays and you're okay with whatever scenario plays out, you're going to just manage it accordingly, why are you beating yourself up psychologically? And so I have like this rule that if the option doesn't expire in this calendar month, I rarely look at it. because I'm wasting a bunch of energy trying to manage a fucking cover call that expires in January 2026, bro. What are you even doing? I mean, what are you doing to yourself? It's just, I mean, but again, I'm here for the dollars, not the drama, right? So anyway, did you catch the seminar, Samir? Is there
Yes.
any constructive criticism that you can give me? Because I do aspire to put these on a couple of times a year. I'm also going to look at doing these live in person because I want to get to meet a lot of you guys in person. I've really enjoyed the FaceTimes that I've been doing with the members. It's just been, I never thought it was going to be that enjoyable. So I'm looking to try to promote that membership now because one, I feel like I'm legit giving these people value.
Absolutely.
So I'm like, I don't have any shame at charging you $25 a month for that one conversation because I feel like I'm giving you $250 worth of your time.
Yeah.
My time. Like, I'm like really focused, dude, and I'm like analyzing these portfolios and their situations and stuff. So there's no shame in my game now because I know that I'm delivering the value because I get the feedback on a daily basis. So what did you take out of the seminar if you were able to watch it and tell me what you think that you would like me to add on the next one?
Oh, yeah. So I had fundamental mindset clarification, the basics of RSI to Bollinger Band. But most importantly, I think in this session, what I was looking forward is outside of all the points that Bill covered, is to have the theses that you talk about conviction, high conviction, the theses that you believe in, and you go all in with your facts, figures, and numbers in there. And then you ride the wave, navigate your risks as you pass through, and learning that art of keeping your mind calm and not to make a decision rather than to navigate through the risks. And that's what I learned from you being. I've seen some of those TSLLs and the Palantir $12 calls, the way you've been rolling it over for me, and it gives the right mindset. So if you could touch base on those topics of we have high conviction in our trades, and that's why we get in. But now when things go south, how do you handle and how do you navigate through those risks? And and also, how much do you limit when to risk the hedge, when not to risk the hedge? Because especially like yesterday, and MicroStrategy went all over from 220s, 230, 240 to 260s now. And nobody can plan these things, right? And Bitcoin shot up to 76K. And yes, we have high conviction in Bitcoin, but we didn't expect to go overnight. So all those stuff happens, but we also know it will come back. So how do you negotiate? How do we navigate that?
Awesome. Yeah, I'll definitely take that into consideration and make sure that we hit all of those points because it's not an accident that some of these positions get a lot bigger than others.
Yeah.
And the main reason that it happens is because the story got better, the fundamentals got better, the numbers got better, but the share price stayed depressed.
Yeah.
So it's like high conviction, low cost, back up the fucking truck.
Yeah.
That's the asymmetrical bet that we're looking for in the stock market. You got to know when it's time to make hay. It's sunny and 75. Get your ass out there and build some hay. We don't know if it's going to be cloudy and rainy tomorrow. Today, we can make hay.
Yeah.
The issue with it is you back up the truck, everything's loaded, and then holy shit, it takes 6 months, a year, 2 years for the freaking hay. So you're like that the whole time. So then now you start selling covered calls against all this hay that you already built because it ain't time to go sell it yet, right? And that's where it gets tricky because you're like, oh, I got all this dead money. Nobody said anything on my comments for the last month about dead money in the portfolio now because that shit goes away overnight. But then what becomes shitty money is, or shitty situation is all your covered calls that are underwater.
Yes.
So learning how to cut losses on covered calls is an art that I have not yet mastered, but that I am working on. That's the last wrinkle to my game that I really need to polish up. It's like being a seasoned golfer and you have all the shots in the bag, but there's some shots that you hit with a lot more confidence. I mean, I can't really relate because I'm not a good golfer, but I know people that are. That shot is the one that I can't hit under pressure, right? Like cutting a covered call and taking my little hedge off, taking a small loss and letting it run. I was successfully able to do that a couple of times on SoFi recently. I did not do it on Riot this time.
Yeah.
And then I kicked the can down the road to January of 2026 because that was the initial plan in the journal. So I stuck to the plan because I was like, well, it's Riot. They'll probably dilute. They'll probably get in their own way, if you will. So they might not go to 30, 40, or 50 because they have other financial needs, etc. But I hadn't got to know the company a little bit more the way that I have here recently, right? Because we went to Irvine, etc. And then now we're going to go on November the 20th to go walk the facilities and stuff with Jason and the other guys.
Mhm.
So knowing the trajectory that they're going on, I should have freaking taken a little $10,000 loss. And I say little because it's all relative. But I should have taken that $10,000 loss and just let the shares run.
Yeah.
But instead, I was comfortable putting them at 15 and 20 a year from now.
Mm.
And I'm like, oh, I'm going to make a shitload of money anyway. It's going to be okay. But now it's like I'm only positioned for a double. I could have gotten a 4X or a 5X. Who knows where this shit goes, right?
Yeah.
But that's also another thing that I'm going to talk about is you got to get comfortable winning big. I'm not that comfortable winning big. Like I used to have this poster, and I'm going to try to bring it out. My wife doesn't like it, but it's like you want to make $1 million, and it gives you like how to do it.
Mm.
You know, you could make like $100 a certain amount of times, $50 a certain amount of times, $1,000 a certain amount of time. It just does the math on it. And to me, it's always been easier to make like $1,000 over and over, $10,000 over and over. But when you start getting close over $100,000, I freak out a little. I clam up a little. Where there's like the Jesse Dows, bro. This dude's comfortable making $500,000 on a trade. I'm not, because it hasn't happened to me very often. But I want to make $50,000 repeatedly.
Yeah.
That's not the same, and so I'm a base hitter. Like I'm a singles and doubles kind of guy. There's people that step up to the plate and they're like, "Fuck it, grand slam time." You know what I mean? The opportunity's there. So I'm trying to like have that in my arsenal because that's a skill set. It's a mindset that I have to polish up. But this is what's coming at you guys on part 2. Hopefully you guys are looking forward to it.
Yeah.
But what about you, Marshall? Anything that you'd like to add on the seminar stuff? And then we're going to get into fix y'all's trades, and then we'll look for the $1 million cash grab. We've got a lot of cash available.
Yeah, I thought the seminar was great. One thing that I'm trying to get comfortable with that you guys are touching on, is having conviction in the plays. I think Bill asked right when we got on is like, hey, any ideas anybody has? It's tough coming up with the ideas, right? And to really research them, stay involved. You had a lot of Warren Buffett quotes on there. One that I've always attributed to him, I think he said this, is buy what you know. And I've always tried to kind of have my portfolio that way. I've been a real bull on Tesla personally since 2018. Actually, one of my oldest clients, he's in his 80s. He gave me a ride in his Tesla in 2018 and had the rear facing camera on while we were driving. And I thought it was the coolest thing. I never seen a camera that worked that way. And so I got my Tesla, and then I got Tesla Solar. And as I've been going through this, similar to you, I'm trying to get comfortable with the big win because in this business, people usually play it pretty safe.
Yeah.
One of the investment analysts that we follow, he puts out one call essentially a month, where one play. And I remember a couple of months ago, Hershey was trading at like, I don't know, they were like 198, and he had a play buy Hershey, sell covered calls at 201. And I remember thinking like, what in the heck is this? Like, that's a 2% play or something. And my partner's like, hey, you annualize 2% times this many. And it's like, yeah, that sounds good. But, now where's Hershey at? I think it's like at, sub 170 or something like that. So, the problem with doing things like that is it's just a play for a percent or two.
Right.
You don't really have conviction in it. And those things are still not going to work out all the time. We're not going to bat 1,000 in this business. So, what can we do to really try to supersize the gains? Not get greedy, but could you put in more research, be more involved, and be ready for a higher intake? And so I know that small caps are doing well recently, but also I've been on the thesis of let me try to get these companies while they're young. I could really see HIMS being the Amazon of healthcare. in 5 years or 10 years. So a $500 billion valuation, 5, 7, 10 years from now seems completely reasonable to me. Now, maybe they top out at 50 or 75 or 100 or 150 or whatever, but they're building a great team. SoFi, kind of similar. Robinhood, similar. Palantir, similar. Now, on all those except Palantir, I was able to buy the shares, strangle them, but then I have kind of stopped selling the covered calls on all of them. And what I've been doing is kind of using the puts as my way to do that. So I go and I'll buy puts like on SoFi and HIMS, for example. I'm out in like 2026 and 2027, and they're ridiculous numbers. I mean, if you essentially pay in the money right now or sell in the money, you're getting these huge premiums that are like 30, 40, 50% of the stock price.
Right.
And I'm comfortable with that because I don't mind getting put the stock. And so, I'm trying to deal with the positions that I have conviction in, but also how do I manage that for more than one person? And a lot of people have a concentrated position, and this is a great opportunity. If you have a concentrated position and you can't sell it, like I have somebody that has almost 20,000 shares of NVIDIA, and they're 99% gain on this in a taxable account. They're
Yeah.
not selling these shares. They're going to die with these shares,
Yeah,
which
yeah.
is fine. But we're able to use the margin buying power, sell puts, use those premiums, buy shares, then sell covered calls, rinse and repeat, and really create a great portfolio. So I think there's a lot of tricks that people can use and tips. And the one thing that I'm trying to focus on is really do more research on not fewer companies, but have 5 or 10, like you've suggested, maybe 15 that I'm really doing all the research on and I'm comfortable with it. And
Right.
I don't want to miss out on the stock by limiting myself. Like I said on Dutch Brothers, man, I sold that call too low. Now I'm going to have to go in and decide, hey, do I really want to be a part of Dutch Brothers? Because I'm going to have to take a loss on that call, but maybe I'm comfortable with that. We made 20% in a day or two. But then through selling puts, I was able to get another $5 off the stock through the combination of the puts that I sold, which all look like they're in really good shape now. And so, I know you said that if you don't have expiration in the month, you don't really look at it. I've kind of gone the other way. I really look at it because what'll happen is on a down day, I'm looking to close out these calls on an up day. I'm looking to close out the puts, and so I'm really trying to be dynamic in my approach to capitalize. And sometimes I'll sell something for $8. I just did this with ANET. So I bought ANET the other day. I paid 404 for it. It popped down to, I don't know, 390, somewhere in there. I closed out my 450 call, which I had gotten, I think, $8 premium on. Bought it back for like $4.50. So I scalped that $3. And then as soon as the stock popped back up, I sold it again. And so I made an extra, $4 or $5 on that stock by just being active in that market. And so, that's a way that I can justify taking a loss on a call and keep kind of rolling it, as you say. So, I just think being dynamic in your approach really can lead to good results. And that's not for everybody. Again, not everybody has that time, but, I'm sitting at the computer all day. So I've tried to do that.
No, I get it. I get it. What about you, Santosh? Did you catch any part of the seminar this Saturday?
Unfortunately, I was not there, so I'm not aware what has been discussed during the seminar. So yeah, but pretty much, doing, shares buying, covered call selling, option selling. Pretty much, I'm into it. I don't have big account, but yeah, it's quite okay account at this moment. Last 3 months was fabulous for me in terms of making profit, good PNL. So trying to learn as much as possible from you guys, to be honest. So far so good. Hoping for tomorrow FOMC will be good for us, in favor to us. We see some decline, some good news in terms of market, that accept, and we will see some more S&P and Dow Jones go up. So yeah, that's all about. yeah, from my side.
Very cool. Well, let's get into the segment called "Fix My Trade." I guess we can start with Samir. You have a situation with cover calls, I believe, that you're kind of underwater on. Walk us through the scenario. I'll see if I can pull it up on the Robinhood account, and then see. We'll calculate extrinsic value, all those things, and see what's the risk of early assignment. Because whenever you're underwater, a covered call, you have to like figure out, okay, cool, how did I get here?
Yeah.
And what do I do now?
Yeah.
Like,
So
what am I trying to accomplish? Like you got to ask yourself a series of 3, 5, 10 questions, and then because you already know the options, right? The option is to do nothing, let the shares get called away. The other option is to roll for a credit or roll for a debit. And then the other thing becomes when to do it. When is the optimal time to do it mathematically? And what are you trying to accomplish with that roll? Do you want to fix the trade once and for all? Or do you want to fix it incrementally because you're okay managing it for the next 3 to 5 to 10 years? So you have to have a lot of answers to the questions on the test because it's not a one size fits all suit. So walk us through your situation.
yeah. So I have two of them, which is one of them is your favorite Palantir. The other one is the MicroStrategy. The MicroStrategy, my average cost basis is around 130, and I had a covered call for 220, and it was hovering. The MicroStrategy was hovering around 220, 224 to 240 last 2 weeks, and it did come back to 221. And I was thinking I do have a premium of $10, so my break even point is 230. So I was thinking 230 and above. If it crosses, I will think of rolling over, and it's expiring November 8th. So I was thinking I'm pretty close. With Trump's announcement yesterday, it shot up like crazy. I'm completely out. So now I have an option either to roll it out with credit or debit and try to fix it over a period of time. So the best optimal solution. I'm okay to get it called away because I do have enough MSTR. I'm fine with it, but I'll have to pay a huge capital gain if it gets called over. So I'm trying to avoid the capital gain in this process as well as avoid
So,
losses.
so you have cover calls at 220 for what expiration date?
11.8.
So in a couple of days at
Yes.
220. So shoot, just doing real quick math, you don't have, you have 22, 20, 30, 40, 50, 57. Shit, you got $1.50 maybe of extrinsic value. So I would say, I mean, look at your delta. Remember what I've said on the channel. The job of the greats is to get the delta to -1, 0, +1, depending on what it is that you're trying to accomplish. Uh,
Yeah.
so sorry about that. I got distracted. Anyway, 1 second. 1 second. So what are you trying to accomplish? Sorry about that.
Yeah.
You obviously want to keep these shares because you have the taxable implications, correct?
Yeah.
Okay.
But, Samir, are you just trying to keep it for tax reasons this year, or you're okay with it being after year end? Are
I
you just
want
trying to
to.
avoid it this tax season?
This tax season is my priority number one, not to get dinged because it's hardly a month and I can push it out and save for next year. Second thing, if I can keep the shares any day, I will keep it because I'm more bullish on MSTR with Trump coming in. So it's gonna be at least 350 in next 90 days.
So if it's me, again, I'm not telling you what to do, just telling you what I would do. So we got to make good on this premium right here, and that's 36.20. I would, first of all, I would have probably already kicked the can down the road, but granted, this thing went up because it was at 2:30 something, right? Yeah, so
Yeah.
it was, yeah, so this is all just happened today, right?
Yeah.
Yeah, so I'd probably look a month. I'd probably look a month and see if you can add 10, $15 and just start playing that game.
Mm.
Uh, I don't know how big the Trump pump's going to be, right? I
Yeah.
don't. We have Fed meetings. We have stuff going on. We still have some uncertainty. There's always uncertainty. We don't know how the world's going to react to the Trump presidency. I think it's going to be pretty favorable personally.
Mm.
But again, it just depends on who you are. Are you a Band-Aid roller or are you a fixed patient roller? There's some people, and I'm a little bit of both.
Mm.
When I'm not attached to the shares, I do Band-Aid rolls, meaning incrementally out and up, because I'm not trying to lose my liquidity. But when I'm long the stock and I don't want to mess with it and I have enough cash flow coming in through other sources, then I'm just like, I don't want to mess with you. Kind of what I did with
Right.
kind of what I did with Riot here recently, kind of what I've done with Summer SoFi, kind of like what I just did with Tesla. I thought I'd kick this can so far down the road, January 2026 at 280, and I was golden until today, right? So, but it's like, okay, cool. Well, I'll punt it again in 6 or 7 months, another year, and I'll go from 280 to 320, 330. And then it's just a game of math. Even if I have to do it for a little bit of a debit, if I'm qualified, if I think Tesla's going, but it's like I'm long and strong, so I don't give a shit if I'm playing this game till 2030.
Yeah.
But I've already made that determination. I think that when rolling options gets very, very difficult, it's when you're unsure of whether or not you're legitimately long that stock.
Mm.
You start punting it down the road, you lose all that liquidity.
Yeah.
And then anytime you roll an option, guys, it's like trading a used car with negative equity.
Yeah.
You do that 3 or 4 or 5 times, you're not putting any money down. You're inheriting negative equity into the next loan, into the next loan, into the next loan. Fuck, before you know it, there's nothing you can do except write out the loan, right?
Yeah.
That's kind of what you're doing with an option. Is it all looks good because credits are coming in for the most part.
Yeah.
But then you go look at the market value of your option and you're like, holy shit, dude, I got some market values like I'm bound to. I think it's like $300,000 or $400,000 for covered calls.
Yeah.
And I know damn well I didn't bring no $300,000 or $400,000 coming in. So that's where you got to do the books. Let's welcome Dallas to the stream. Tell them the story, Dallas, when you first started rolling and you're like, how could I possibly be up 80% and it all looked good? And then you did the math and you lost money.
Yeah, so Robinhood specifically, but I still have not found any broker that actually keeps the credits and the debits tabulated. But
Yeah.
when you roll an option, that they're not going to keep it up to date with you. They're just going to show the latest option. And so I thought when I rolled, when I was a newbie, I rolled it, and then the very next day it went in my favor, and it was showing like a massive gain. And so I was like, wow, like I better go ahead and close this out now, because yesterday I was just down several thousand, and today I'm up several thousand. And then later on, I was just thinking like this has to be too good to be true. And that's when I started keeping my own, little wheel tracker of credits and debits, so that would never happen again. Because once I added everything up, I realized that I just locked in a major loss without even realizing it. So,
Right.
Yeah. No, that's good. Yeah. So I'm definitely a long term. I can kick this can long because I'm pretty bullish on this. And if there is a Bitcoin down, I'm pretty sure it will be with that volatility. Whenever it goes down, it's the right time for me to close the trade. So
Make
So,
sure you
Samir, you realize, like, regardless, right now you're probably sitting on a huge loss on your covered calls. So if you roll it, that loss, and it's kind of what that Dallas was talking about, that loss is going to roll into your new position essentially.
Yeah.
So it's, if you can do it for a credit, I mean, at least you're, making yourself eligible for more capital, capital appreciation. So,
Yeah.
but there's a good and bad part to that, right? Because now you're stuck with that huge loss still in your new position. But the positive side is that it actually creates a huge hedge for you when the market goes down.
yeah.
So
Got
there's always the gimmies and gotchas, but if you're long and strong, at the end of the day, it's not going to matter so much.
Yeah.
You just have to let time play out most of the time.
Yeah. No, absolutely. No, that thanks for the advice. So the other one, TJ, is our very good one, Palantir. I had a covered call. I got in at 17, 19, 20, 21, 23. I thought 36 is no big deal. It will take a long time. So I was putting covered calls for 36 and collecting it. And suddenly out of nowhere it started from 33 to 40. Boom. And I'm like, let me roll it over a couple of times. So I rolled it over at 41, and now it is still at 36. It's expiring end of November 11/29. But it's
So what is the strike price? I'm sorry,
36.
3.6.
Yeah.
Oh boy. Shit. 36, 46, 56. Shit, man, you don't have a lot of extrinsic value here, but Palantir's historically doesn't really get called away from you early. I mean, I've got $12 cover calls that I still own, which is kind of funny.
Yeah.
But there's just no financial incentive for the person on the other side to execute, too far in advance. I mean, they're just not incentivized to do so. It's not a dividend paying stock. So again, it's just math, right? So you got to make good on this 1950. And how often do you want to do it? Are you okay just going up $1 at a time, or where are you at? I mean, that's a decision that you have to make.
Yeah.
And if you think, and my big thing, like on Palantir, like I'll show you on my cover calls, right? I've shown them on the channel before. So everything looks real peachy over here, but over here it doesn't. Look at the value of these cover calls right here. You see that?
Yeah.
So essentially, I would give back 675 if I said, fuck Palantir. I'm going to give back 675 and I'll make nine, so I could realize another 300 and be done with this thing. I've already made a couple hundred off it. I'm done, right? I don't want to do that because I think there's more meat on the bone. I want to be qualified for it. So I've got cover calls at 45 and cover calls at 35 weighing the distance. So I'm like in May, somewhere around May or June, I'm going to put these up for January 2027. And I want to add $5 to $10 to these guys because nobody's going to convince me that the valuation on Palantir makes any sense. So my cover calls say that. Like I stand behind my conviction that I understand what a fucking PE ratio is, what a PEG ratio is, and what a PS ratio, and this fucker ain't making any sense to me. The math doesn't math. So I feel like at some point, somehow, this thing's gonna have a haircut. So I'm not going to go roll for debits and put like a $70 strike price because I don't want to mess with it just to see this shit potentially with any type of correction come back down to like $30, and then I feel like a fucking idiot.
Yeah.
And the argument on the other side is always like, well, you can always roll the cover call back in. I played that game before, and that doesn't always math either. Because I tried doing it here recently on Tesla. Kicked the can down the road to 280, January 2026. Tesla went down, and I was like, well, can I bring it back to 225 for January 2025? Because that's where I had them originally. And never did I even come close to the $40,000 that they paid me to roll it to 280. I was having to give back like 60 to go from 280 back to the original 225. So that math didn't really work out either because I tried because I'm experimenting with things because you hear things, people put shit in your ear all the time. So I'm like, well, let me see if that's true. Well, that one didn't work out. I mean, it's just one example, but that one did not work out. So you just got to figure out what do you want to do? Like, what are you trying to do here? How long are you on Palantir? Are you really long, or are you okay maybe increasing the strike price to 40? And if it were to like dip to like 40, are you okay just getting out of the shares? You qualified for a little bit more meat on the bone. Like, where are you at?
I think it's anything beyond 36, according to my math, Palantir is completely overvalued. And we all know that there is a lot of hype, a lot of expectation on future and hope on that it will scale, which is after this earnings. But I still don't see the valuation going beyond 42. And I'm pretty sure it will.
But Mr. Market saying it's worth 57.33, right? Because I have my ideas, but I mean, this is what the market says that Palantir is worth. If you want to buy one share right now, you got to pony up
Yeah.
57.30.
Yeah. So I want to keep it around 42, and then whenever it at the right time, if and I'm pretty sure there will be a cleanup. I think I can exit that trade, and I do have enough gains on that one, so I'll keep in there.
The only thing that I can tell you is, like, again, Donald Trump just obviously became president-elect. They're probably going to try to clean up a lot of shit in the world right now, like as far as like geopolitically and stuff. So I think Palantir might have a lot of work, so
Yeah.
to speak. So there might be some bigger contracts there because there might be a lot of shit that the government wants to like tighten up. So I think that they're definitely going to have their hand out to get a bunch of government money.
Yeah, especially Vance and the
So
Palantir co-founder.
all
Yeah.
I'm cautioning is be careful. I know sometimes the valuation doesn't make sense, but you also have to look at the underlying.
Yeah.
Do we have any levers that they could pull that could potentially make them grow into this valuation to the point that it might even actually seem cheap down the road?
Yeah.
And Palantir is one of those weird situations because the more effed up the world becomes, the better it is for Palantir. Because there's more shit that they need to fix, right?
Yeah.
And then they have a very, very sticky business model. Once they get into your ecosystem, there's no getting out of it.
Yeah.
So that's the part that's tough about the company, you know? So another thing that I'm working on, little wrinkle for my game, is if I'm not willing to add any more shares at certain levels, then why am I so hell-bent on trying to preserve those shares that I have? So it's just a greed thing at that point. Like, I want to capture all the upside. So it's like I'm asking myself, am I just really just enamored at trying to sell at the top?
Yeah.
You know, so you know, again, it's an art, right? This isn't a science, dude. This is a suit that you got to figure out however it works for you. But Dallas, real quickly, dude, now that you're back on the stream, hopefully that helps you out. It gives you some ideas, Samir.
Oh yeah, wonderful. Thank you, TJ. Thank you.
I know you're busy. You know, you have the full-time job. You work as RoboCop or whatever, and then you did the shooting thing tonight, right?
Yeah.
Did you catch any of the seminar on Saturday? Because I was trying to target the beginner, and then I'm doing part 2. That's like, okay, now you decided this is what you want to do as a career for a business, and I want to like really hammer down 5 or 10 examples on cash puts, cover calls, rolling, why I manage them the way that I do, etc. And just to kind of like really get more into the weeds. And then afterwards, part 3 is going to be having fellow wheelers come up with like 10 to 20 questions. And then I want to have a frequently asked questions segment for the book. And then you guys just fire off all the questions and I just answer them the best I can. So that'll be like part 3 of the seminar series. And then at that point,
Are you asking for my what I thought about the marathon, the 3-hour video? I thought it was great. I watched the whole thing on like 1.75.
Man,
You seem to stay on track pretty well. I think the only thing I would, I know you asked if I could join that day. I wish I could have. I definitely want to be a part of the segment on some alternatives. I think one thing that a lot of people are misguided on is that you can just roll in perpetuity, you know, and fix your problem. And while you technically can, like, it's not, I guess it depends, like you talk about often, is do you need this for income?
Yeah.
Or is it, are you looking for portfolio growth? Because like I've documented, like I don't hold Riot anymore, but I said all along, I would not sell cover calls on Riot. Why?
Yeah.
Because
Facts.
we could see what was coming,
Yeah.
right? And so, but this is your full-time job. You have to sell calls on Riot.
Yeah.
Because you're kind of doing like
and not bring money to the door.
Right. But that is not the reality for 99% of people watching this right now. So I try to encourage people to be more selective and not get so infatuated with the premium, because I see it in the comments. Like, the vast majority of people's portfolio problems is underwater covered calls. And I did a video on it a couple weeks ago. Like, are covered calls even worth it? And I think they are to a point, but in a confirmed bull market, I think you have to be extremely selective with cover calls. Also considering what type of company you're talking about. Is this a growth company? Is this something that, maybe like Apple, where you can probably get away with, it running away from you because it's going to settle out. But when you get into momentum stocks like Palantir, or like some of the crypto plays, derivative plays, it can be something that you don't come back from. And then the sucky part about it is that by the time that stock ever comes back to a lot of people, it's going to be in the midst of a market crash. And so it's not going to feel like you really won, because your portfolio is going to be massively down. So you won't really be happy about Palantir coming back to you, because it's going to be a bloody mess. Also, one thing I just want to talk about today, since we've both owned Enphase in the past, I didn't get a chance to do a video tonight on it. One thing I almost never hear talked about on YouTube is anytime a stock like that takes a big fall, in my experience, it's advantageous to roll a little bit prematurely, even if you have significant extrinsic value. Why? Because a lot of people lever up on these type of companies, and some people, they will put those shares on you early because their portfolio is coming down so significantly. They cannot afford, they potentially could be coming up on a margin call situation where they don't even mind owning Enphase and holding Enphase, but because it's come down so drastically, they're nearing margin calls on portions of their portfolio. So they may actually put those shares on you prematurely than they normally would if a stock just breaches your cash secure put, because they need to make moves in their portfolio. So I rolled my 95 Enphase puts down today, just to 94, just $1, and I bought a few weeks of time, because I've had that happen to me in the past, where with Tesla, actually, it happened on Tesla's big crash a few years ago, where I had several hundred shares put on me far prematurely than I was expecting. And many feel that that's because other people are reaching possible margin calls. So they need to do that even if they don't want to avoid possible portfolio liquidations. So I know probably some other people are in Enphase in the chat. So that's something to consider.
Yeah, well said. And I think that's the big thing is there's like 3 or 4 thorns on cover calls for me. One is, okay, if I start rolling out, am I like legit long this stock? Meaning there's no price. And you got to define what that means to you, right? Somebody's like, I'm long the stock. And you can ask 5 people what that means. You get 5 different answers. So when I say I'm legit long the stock, there's nothing Palantir can do in the next 3 to 5 years to make me want to sell it during that time. Price action wise. Something happens with the investment thesis, CARP steps down. I'm not convinced that the next guy or gal is the right person that I want to rock with. I might be outies. Same thing with Nodo and SoFi. Same thing with Elon Musk and Tesla. My biggest issue with investment thesis is the key man risk. You take Elon out of Tesla, bro. No. I used to be real bullish, saying I think Tesla would be better off because that person's going to be focused 100% on Tesla. Now I'm thinking, dude, there's only one Elon Musk out there. What was he called? The super genius last night? Donald Trump. I'm just like, dude, I think he's that dude. You know what I mean? So I'm like, I want to rock with that guy. I think Anthony Noto is that guy for SoFi. I think Vlad's that guy for Robinhood. I think Alex Karp is that guy for Palantir. Like, these people become synonymous with the brand, if that makes sense. That is so damn hard to envision somebody else at the helm. It's kind of like when Steve Jobs lost his job with Apple, then he did the Pixar and everything else, found himself, and then came back when Apple was in the shit. And then it's like Steve Jobs became synonymous with Apple. But then, they got, I don't know how many people before they landed on Tim Cook, and then they got to levels that they weren't even with, that's Steve Jobs. And then, like Bezos, right? Same thing with Bezos, right? Like, remember that whole talk? I mean, I'm showing my age, but I've been in this game for a while. Remember when Bezos said he didn't want to be the CEO of Amazon anymore? Like, dude, that was like, oh shit, what's going to become of Amazon? And Amazon, it turned out okay, right? They actually learned how to make money. So it's, so it's those kinds of things. Like, are you able to handle those types of things? If you are, then you're long the stock. But if you're like, I'm long as everything looks good, but I still want to maintain liquidity, then cover calls might not be the best instrument, or you're missing a key component. And that's what my wraparound, my button-up strategy, and that's the long calls on top of the position.
Yeah.
Because, dude, if I would set the entire portfolio up the way that I have set up the SoFi position, this shit would be at like $12, $13 million right now. Because the cover calls aren't able to drag me down so much in SoFi because the long calls are printing. And that is something that I had been doing offline, but then it's just like after a few episodes of Wheelers and stuff, because Dallas and the Mr. Premiums and options would always encourage me, like, hey, like, buy some upside protection. Because you're not going to get me to buy puts, dude. It just feels like, because I'm a purple bull. But I was like, dude, I do buy long calls. Why not just show it on the channel? And now it's actually made the positions a lot more manageable for me. But there's a time and a place to buy leaps as well. And that's why it's so hard, because if you're like building the portfolio and it's day one, well, you can make it all look real pretty. But it's, it's day freaking probably 1,000 in this portfolio for me. I don't know where it is for you guys. So it's tough, man. I just think that this whole thing, every day we learn, man. Every day, we're so puts, we're so calls, collect premium, roll when it makes dollars and cents. That's the core. But then there's other wrinkles that you have to add to your arsenal based on the market conditions. And if it's really, really bullish, or I had this, this debate with the mid on when to sell cover calls on Robinhood on his channel. And he made a very compelling argument, dude. Like, the writing's on the wall. This shit's going up. Why are we going to pick up these $3,000 or $4,000 in peanuts when there's 5,000 share zone? Every dollar, that's $5,000 in capital appreciation. But then the argument for me is, if I'm not okay selling the shares at any price, this is the gold for y'all today. Y'all ready? If I'm not okay selling the shares at any price anytime soon, then I'm not okay not selling cover calls. Because I'm not going to have a big position in the portfolio, just do this, collecting dust. I cannot, that is not the business that I am in. I would rather cover calls be underwater, and I'm going to manage those because they at least produce some cash flow on something that I'm legitimately long on, because I'm not trying to sell it right here, right now. But like CrowdStrike, I've already rolled it to levels that I'm ready to let those shares get called away. I don't give a shit that I'm leaving money on the door, because I'm more interested in the capital that I'm going to have, so I could go sell cash secured puts on the shit that hasn't gone up yet. I'm trying to build a position on Boeing. It's a company that I understand a lot more than CrowdStrike. So it's just easier for me to wrap my mind around what they kind of do, versus CrowdStrike's just out of my scope. I'm not geeky enough. Like, that's just not my thing. I think it's a very important company, but I don't have to be a part of everything. Anyway, Bill, would you like to add, my man? What would you like to add? Because, we can all agree that cover calls, as much as we love them when the market's kind of going sideways and going down, they're kind of a pain in the ass too, right? Just in general. Cash secure puts are just easier to manage for whatever reasons. I feel like we're not fighting gravity, right? Whereas with cash secure puts, you're kind of like fighting gravity the whole time.
Yeah, cash secure puts are definitely easier for me. Yeah, I guess I have a little bit to add, but before I say it, let's talk about some things I have to say about Boeing offline. The government might be changing some things around where the cost plus, especially under a Trump administration, where the cost plus contracts might be going away or being kind of minimized, and that's going to significantly hurt them. So we'll have to talk about that. But yeah, for me, I'm kind of in your camp where I feel I have to sell covered calls, and I accept that I might get caught sometimes. I'm looking to make this a income generating business. That being said, there are a few tickers in my portfolio that I've decided I'm not going to sell it.
You're done.
Everything else is for sale, but some of my Palantir shares, I'll kick the can down the road a year or two, just get ahead of the stock, and if it goes down, great. I don't care, because for me that's more of a growth play. And if it's not working out right now, that I can make a significant amount of income off that portion of the portfolio, I've accepted it. But with everything else, I don't care if it gets called away. I don't care if I'm playing them from behind. As long as I'm collecting income, it doesn't bother me at all. So I think, every person's going to have to decide what that ticker means to you, and because TJ can't give you the answer to that. He can't give you the answer to, like, hey, you like MicroStrategy, like, oh, well, just do this. What does it mean to you? Are you willing to kick it out a year and just get ahead of the stock again? Because you're really ultimately looking for the upside potential in that stock going up. So you really need to kick that around, and Samir, it's kind of a perfect thing for you to think about right now. It just really depends. So you need to figure it out for yourself.
I agree. Y'all want to get into something a little bit more fun?
Thank you. It's a fantastic to hear different perspective coming to same conclusion. Yeah, I'm long on that. I'm also looking at the one more ticker, which is all positive after this. Only these two are the covered calls which were the issue. The SMCI going down under the tube, I just escaped it. Just before that, the 10K filing date was issued, and the Ernst & Young put a tweet out there. So the business from SMCI getting lost is being taken by Dell. So I've been on riding that one from 110. So Dell is now at 136. So what's your thoughts on that one as a new ticker? Because all the infrastructure, AI data center play and setup is all going to be taken over by much more trusted from Dell instead of SMCI.
Yeah,
So
I guess I don't have an opinion on Dell, me personally, but I will say, just as someone who is a trained accountant, the fact that their auditors left is not a good sign. I don't know what they did. I don't have any sort of insider information here, but I'm willing to bet it has to do with revenue recognition to some degree, and something's off there. And I know companies like NVIDIA aren't going to be so happy to be working with them if they have that hanging over their heads. So I think you're right. I think some of those contracts will be going somewhere else. Where it goes, I don't know.
So my hunch is
They're a big customer of NVIDIA, right? SMCI.
Say that again. You cut out.
SMCI is a real big customer of NVIDIA's.
Yeah. So they are the one who set up the data center play for all the Uber data centers that are being planned out. Like Oracle is betting on them. Every other company tries to build data centers, coolant systems. Everything is supplied by Supermicro. But with latest mishap, I think it's going to be Dell riding the wave.
I hear you. Well, let's pivot a little bit, guys, because I promised my wife wouldn't be on here all night. So we introduced a new segment a couple of weeks ago, and it is the $1 million cash grab segment. So I've got $1 million that is earmarked, ready to rock and roll. Riot was the first one. Where I went super heavy on a short dated cash secured put, and I wanted to literally milk 80-90% of this thing. So I positioned the portfolio to where I could do this, over and over. So it was here, it was 850s. So I think it was right in here. Sold. Can you guys see that? Okay, so it's highlighted. I don't know if you guys can see it. They sold 500 cash secured puts at 10.50. I mean, at 8.50, sold 500 cash secured puts, brought in 10,500. We're tying up $850, 500 times over. Got the 10,485 because they jabbed you for the 3 cents a contract. And then I did it again. I got 200 contracts, got $32. So that puts us at 700 contracts. Did another 200 contracts, got another $32 contracts. That's 900 contracts, and then did another 100 contracts and got $32. So it was a total of $26,500 in premiums. And then Riot started going down, and I did an additional 200 contracts, but for $12.20, and got 7,200 on those. So between it, you're talking about 26,500 plus 7,200, whatever that math ends up being, like 33 grand. And then today I was able to buy out the 1,000 contracts for $2, so $2,000. And I was able to buy out the $7, buy to close the $7 puts at 2,600. So collected about 33 and gave back 4,600 for a profit of about 29 grand, and used about $1 million in capital, right? Because $700 times 200 is 140,000 plus the 850,000. So I think you're talking about 990,000. So it effectively became $1 million cash grab, and probably ended up capturing over 85% of those premiums. So that kind of set the bar. And then you see that the covered calls that I had all sold for $12.20 at $10. I rolled them from 10 to 20, picked up 8,900, and I'm like, I want to position myself for a double in the portfolio. And then over here, I rolled them from 10 to 20. I think the other ones were for 10 to 15. No, these are all 10 to 20. And then these are also 10 to 20. So 60,000 shares, I rolled them from 10 to 20 a year out. And then over here earlier in the day, I had rolled these covered calls right here from 10 to 15. So to June. But I was like, I don't want to do that. I want to get a double in the account, because that's more important to me, to try to get a double on that portion of the portfolio than premiums coming through the door, because this would totally outperform the share price appreciation, would totally outperform any premiums that I can get with these covered calls. Can't manage the covered calls anyway. So let me pick a strike price that I'd be like, you know what, dude, you wanted to take the shares, fuck it, there they are. So that's kind of what I did at 15 and 20, and thinking there could be dilution, Riot might help me out, so to speak. So that's where I'm at. So now if you look at the situation here with the portfolio, there is a ton of buying power. There's a ton of buying power. Individual cash is high. The margin totals available. We're using some margin to sell cash secured puts, but there's a lot of buying power. So now the question becomes, what's the next $1 million cash grab? And I'm targeting an 11/15 expiration date. And I wanted to bring in annualized at least 30% returns. Preferably 40 to 50%. That way, when I close it, it ends up being, because it's like there's premium collected versus premium captured. Or they call it cash flow versus cash stick. So what do you guys have? What do you guys have as far as ideas? Because the first place that I always like to go is what's already worked. You know what I mean? I'm like, what can Riot do for me? You know what I mean? And I know that it's probably good for something in the 30 or 40% range if I'm willing to go 10 or $11. So that's the possibility. I'm comfortable. If it came back down, I would just manage the cash secured put, because $8.50, that's acquisitions target zone, right? So you have like, where am I willing to cash grab, and where am I really willing to take ownership of these shares? So when I'm cash grabbing, I'm looking at that 35-40 delta. Because if I'm right directionally on the off chance, I want to maximize the money going through the door. So now I'm overperforming in the portfolio on that portion. But if it goes against me, that's kind of a good thing from the standpoint that now the price is more attractive. And then I'm going to roll to an area where I would actually legitimately be okay taking ownership of these shares. What makes it difficult with the $1 million cash grab, boy, you really got to like that underline. So it really limits the opportunities because you may potentially have to own these shares. And I would literally sell covered calls. Like if it happens, it's going to happen in one of these episodes where I have to take ownership of $1 million worth of this stock. It's like, holy shit, your individual cash balance just got hammered. So now you're like really lopsided. I will literally just be selling covered calls pretty much right where I got to sign. And then if I get away with that the next week, I'll try to increase it 50 cents to get some capital appreciation out of it too. But then make no mistake about it, dude, I'm trying to get back into cash. Because I don't want, there's not another stock out there that I'm like, ooh, I want to own $1 million of, like legit. So that's where we're at. Who wants to start?
Same ticker I say every week, but I can't get you to do it.
Elf. It's got to be Elf, right? Elf on the show.
Elf is up after hours a bunch.
Yeah, they put in some good earnings, sandbagging on their future earnings, like versus their revenue growth. So they're saying the revenue is going to grow a lot, but their earnings isn't going to kind of grow commensurate to that. But I think that they typically sandbag. So you said 1 week out, TJ, 11:15.
Yeah, for 11:15. That way we monitor it and see what's going on. Because the reason I want to do this is because I want to practice dealing with these emotions at these levels. And then also showing y'all why my bread and butter is 30 to 45 days out, because this shit is volatile, yo. Like there was a time that I was down like 30, 40% on that cash secure put on Riot. And then overnight went to like 80 or 90%. Because it's shit or get off the pot time, right? Expiration day every day. It's like it's getting closer and closer and closer. And it's tough. You know, it's tough. So it's got to be something that you're really, really excited about because you might be stuck.
Yeah. The good thing with Elf is that it's come down so much from its highs that anything under 100, I'm thinking, is a great buy zone. So I'm going pretty heavy on the deltas. So I'm going probably like right now. I'd probably go maybe even like a 45 delta, like something like a 105 to 107. I'm guessing of what that would be, but
yeah. So real quickly on the charts, yeah, I hear you, Bill. Right here on the charts, it's a double top, right? So everyone basic knowledge of charts knows that a double top is a very bearish chart. But again, I'm on the 5 year, but I wanted to be able to show you all that double top. That might have happened within the last year, probably there too. You can see it there also. So I like to zoom out because the chart tells the story. So to me, this area here is very, very critical. This area here, this $95 area is very, very critical because after that, where is it going to find support? Just looking at the chart real quickly, forget about trend lines and all that shit. If you just zoom out on a chart, the story is very, very obvious. Like the situation is very, very obvious. Here along the way, there was a lot of earnings reports. There was a lot of either empty promises or good promises. The growth was probably really, really good. And somewhere over here, the growth probably started slowing down. Like whenever this happens, you got to ask yourself why. Is it a macro situation or is it a micro situation, right? Like, is it something specific to the company, like with Celsius, where the earnings were very, very inflated and the growth was amazing, but then the growth slowed down and they're like, oh, no, you're not going to get this type of multiple if you don't keep growing at these ridiculous rates. Because they were growing like CAGR was like 100% or something crazy, right? So now they're not able to do that because that shit's not sustainable. So this is where you have to like really know the fundamentals of the company and what's going on with Elf. I assume they're just not growing as fast. So they're just trying to get repriced and they've been trying to find their footing here for however long that is, which has been about a year. So Bill, you're more familiar with this company. What's been going on with it fundamentally? I know they just had earnings today. So that's real nice because we can get a good idea. But what caused them to go all crazy? It probably had to be growth and margins. And then what caused them to kind of come back down to earth? Is it that the margins maybe got lower, the growth slowed down? Like what happened with the company?
Almost kind of reverse of that. So the revenue growth was outstanding. It was kind of like a Celsius thing where it was growing at, I don't even remember anymore, right? But it was like 70, 80%. And it has come down. But when it came down, it was still incredibly strong growth, and it's starting to reaccelerate. The difference is they're not projecting a lot of earnings growth. So like a lot of people were just looking at the revenue side. I think there's going to be a lot of expansion within this business. So they're going to be making a lot more money, I feel, off of that growth going forward. And so that I think kind of right in the same kind of ballpark that you were saying, I was saying right under 100. If you can start buying anywhere under 100, you're going to be getting a really good deal on a still very fast growing stock with expanding margins at that point. So that's why even selling puts at this level, I'm very comfortable with it. I'm not saying that I'm going to buy or pull the trigger, at 105 or 107, wherever this trade would be. I would still roll it down, but you're getting paid significant premiums and you can start, building those premiums up so that you're already, if you did get into the stock, your adjusted cost basis is going to be, pretty good. So I would probably start in the 107 to 105 range.
So, Bill, can you walk the audience through what exactly does a PE ratio mean? Like I'm a 12-year-old or 11 or true. It's a 50.94 PE ratio.
Yeah, so it's just it's the price over its earnings. It's obviously the higher that is, the more you're paying for that stock, the more that stock is valued at. So I mean, if it's lower, it's typically more of a value play. But that doesn't necessarily tell the whole story, because in fast growing companies, that PE ratio, and you can really throw it out the window. And that's kind of what happened. That's what's happening to Palantir right now. So you have to really like those for a company like Elf or Palantir, you just have to throw that out the window, and you really have to go into like a DCF model and then kind of, put what you believe that the projections are going to be and what the margin expansion is going to be and how that flows down to your cash flow. And you have to discount that cash flow to, current day. So it's just I wouldn't, for certain stocks that metric means nothing to me, especially growth stocks. But for more mature companies, it's pretty important, especially when you're comparing those companies versus other companies in its industry.
Right. So we look at Elf, we look at the actual trade. You're saying like 105-ish? Is that what you're saying?
I mean, I would be in the 105 to 107 range, but that's just because I've been doing this a while and I'm comfortable with if it goes.
Sure. And I've sold some puts on Elf. So we're talking about 90 contracts or so. Is that accurate?
Yeah, about that.
So that's 900. So it'd be like, I don't know, like 93, 94 contracts, whatever it is, right? So one thing that I'm going to be doing in this segment is if we land on a stock, you don't have to do all the contracts at once, right? Like you can scale into the position. That's what I did on Riot. So we can probably do something like 50 and see how it goes. So that's about half of the position. And then if it goes against us, we're still real bullish. We deploy the second bullet. And then we got more, we got a higher average, so we have a lower break even as well. That's like one way to play it. And then we kind of go from there. But the one thing that you have to be able to land on right away, and again, this is why you got, like, I'm only trying to do this on super high conviction stocks, is you got to know what is your acquisition price target. I've already studied Elf a little bit offline, and I can tell you all that if I had to take ownership of these shares, it better have a 9 in front of it. Like I'm looking like probably like 97, 98, where I'd be like, dude, I don't even think I'm going to be that uneasy because the company makes money. So that part's real good. The people wear makeup, that part's real good in my mind. So that's definitely that's crazy premiums. What does the math add up to there, Bill? If we just call it 44,525 and it's a 9-day trade. So let's do the calculator and let's do real quick stock market math.
you want to bring it up just so everyone can see it? I mean, I can do
Yeah,
the math.
I'm working on it. So give me the parameters. It was 44 grand. 44 grand divided by 525,000 times 100 divided by how many days of the trade? It is 9 days. It's a 9-day. We'll call it an 8-day trade because tomorrow
Mhm.
it would be 8 days, right? If I did it
Yep.
tomorrow. So divided by 8 days, multiply it times 365 to annualize it. Yeah, I did it wrong. Something happened. So what is it? 44,000
Divided by 525.
divided by 525,000 times 100. And there's a cleaner way to do the math, but I just like to show the long form. And then you're going to divide that coefficient by the number of days of the trade, which is 8, and then multiply that times. That's crazy. Yeah, it's 365%, bro.
That's what I'm saying. So you don't have to go that aggressive either.
It's fucking retarded. So I would definitely say, hey, let's go look at something more realistic. Or so I'm thinking, let's go over there into 102 range. That's a 30. That's a 41 delta.
Wait a minute.
Go ahead. I thought I heard. Wait a minute.
You did. I don't know where it came from.
Was that
Must have
Albert?
been- Maybe
Was
it's
that
Albert.
Hey, TJ, that was me. I'm having a little trouble with my camera.
Oh.
Let me work this out and I'll get back to you.
Okay, sounds good. So, you want to let's do the math on this one, see if that makes a little bit more sense because that's a little bit cheaper. So, how much is it over there? What was it?
Oh, I didn't see it. I didn't see the premium.
I think it was 610.
I can do it.
Yeah, it's 610. So 610 divided by 10,000. Shit. 10,200
Mm-hmm.
times 100 divided by 8 times 365. Hello.
Yeah, and that's what I'm saying. You can go down pretty low on Elf and still make a great. Like I was just saying where I'm playing it right now, but you don't have to be in that area.
Yeah, so that's crazy. Yeah, so I'm thinking like right in this area would even be ideal. There's 97 range. That's
After
interesting,
after
Bill.
the increase that they just did, though, TJ, it's not going to get close to that 87.
Yeah, let's see how it opens tomorrow because what's not being priced in is they're up a lot after hours, right? Because they reported after the bell. So
Right.
this is where it gets. It's more interesting whenever it's red after the bell. It's a little bit harder when it's green after the bell because you got to price in the new deltas and stuff like that. So
Yeah.
interesting, awesome. What about you, Dallas? What have you been eyeballing over there? What trade's been working for you?
What I've been eyeballing is M-Phase. M-Phase is sitting on an absolutely.
I was so hoping somebody would say that because my play was going to be, bro, M-Phase at like 68, 69. I've already played this game before at 138. You know what I'm saying? And the premiums are ridiculous. So go ahead, Dallas, take it away.
Yeah, if you look at a monthly chart, which is going to be your chart, which is most important as far as major levels of support, it's sitting at an absolutely crucial level of support, literally right this second. It did hold like intraday. I would assume that's traders coming in to support that, but the premiums are amazing. It hasn't been this low in a while. The only problem is if this 74 level doesn't hold, there's really nothing stopping it from going to like $50. But I'm also considering picking up some leaps here because this is becoming extremely attractive at this point. And the premiums are very good on M-Phase. So I think it's worth a shot for sure. I wouldn't be I want to wait until tomorrow, see what happens tomorrow, but I think Friday's probably the day, if not sometime early next week.
And what is, if we look at in phase, like, so the chart's one thing. The other thing that we got to look at is, I mean, look at that. It's just still not a cheap stock. Now, I don't know if this gets re-rated again tomorrow. That's just, I don't know. So if you guys could help me out in the chat, that's still, you're talking about a stock that's 4 times more expensive than ELF on a PE ratio. I know they're totally different sectors. This company went from not making money recently to maybe starting to make money again. The outlook was a little bit not so hot on the next earnings report. It sounded like they had another quarter that wasn't going to be the greatest. So you got to really know what it is that you're getting into.
Yeah.
Because I think that one thing that has hurt me in the past is just looking at where it used to trade and where I think that it can trade again. Because, you know, we were all playing it. I wasn't playing it over here. I started playing it like right around here is where I started playing it. And then in October of 23, took ownership of a bunch of shares over here, right when it tanked, right? Like right over in Vegas, around this area. And then and I got assigned like at 140-ish. And then it feels like it kind of like consolidated for a while, but then it just broke down because of the Trump trade. So like if you look at a chart and then you look at the macros or the fundamentals of the company tied to the macros, the micros and the macros. I guess Jesse Dow does have kind of a cool channel name if you think about it. If you look at the bigger story and then you look at the story of the company, it kind of makes sense why it consolidated and then now it took another leg down because the earnings weren't that great and the call was. It reminded me of Elon Musk 2 or 3 quarters ago. Remember, we just had a horrendous call, and a lot of people were not that bullish on Enphase. So let's look at it. I'm thinking $68 or so, just to have a margin of safety, knowing damn well that this thing could go to the 50s. I think Chris Patel called it a while ago, saying that this thing could go to the 50s. But then also you got to look at what could be a catalyst. Dallas, and that's probably the interest rates, right?
Yeah.
That could be a catalyst. I think this trade would have done better with Kamala because they're more interested in the whole Green New Deal and all that shit. Whereas Donald Trump, like, I don't know that he's ever even admitted that climate change is a thing. So there's those things to consider. So let's just see what happens here.
Yeah,
So,
I think as a cash grab, you can just, especially just on if you want to do weeklies or whatever,
Yeah.
you can probably make a boatload just getting in and out.
yeah, so we go here and we do 200 contracts because that, oh man, so that's, oh shit, that's way too much. Okay. So what is it, like 150 maybe? Seriously, tying up $1 million, you're making 22. It's not as compelling as ELF for sure. This one I'm comfortable with because I've already been in it, but I think if we look at the trajectory of both companies, I would say ELF coming off of a good earnings report versus coming off of a kind of a shitty earnings report and not really sure what's going to happen with the Trump trade. I would say that the risk reward's a little bit better on ELF right now, in my opinion. What do you guys think? Let's go down the panel. What do you think, Bill? Well, I think Bill is going to be with ELF because he chose ELF. What about you guys? What about Samir and Marshall and Albert? What would you guys think?
I'll go back to my MicroStrategy with the bullish trade that is going on with Bitcoin and Senator Cummins. I think she already posted that Bitcoin Reserve will be the dollar treasury strategy coming up in February, which is a big deal. I think there will be a lot of volatility, but for November 15th, we should be stable enough with MicroStrategy to be around 240. And I'm very comfortable to go anything less than to own that stock for $1 million for 200.
So this is one thing that I don't understand about MicroStrategy. And
Hey,
all
TJ,
of
I gotta run.
I appreciate you, Bill.
Hey, man. Take care, guys. Nice
Call
meeting
me,
y'all.
call me tomorrow because I want to do at least 25 on the ELF trade.
Okay.
as a feeler bet.
All right.
Bye-bye. This is one thing I've never understood. Dallas, maybe you can help me out, brother. I've never seen a negative PE ratio on such a meaningful company, if you will. So, like, what, like, I mean, I don't do when I see something that just doesn't make any sense. It just like I always like just shy away, and that's why anytime anybody's ever throwing MicroStrategy at me, I keep typing any fucking tickers, even SoFi, and I'm like, I just go to that metric, and I'm like, why does this one? This one, I know this one's expensive too, but it's not negative. Like, how in the hell is that other one 125 negative, yo? Like, I mean, let's go look at Riot, let's look at Riot, a company that's barely trying to figure out how to make money. They're real new and, to making money. Even they've got a P ratio over here at 33.
I can
By the
take
way, I'm glad. Hold on, Samir. Wait 1 second. I'm glad you mentioned what you just said about the Bitcoin. I think strategic reserve is what you were talking about. It's my personal opinion, and some others of those who I highly respect. It's an event like that, in my opinion, that would be the top of this cycle for Bitcoin for this cycle, because this thing is all rigged to go up. But the whales need a positive catalyst such as that to bring in all of the normal people who have no idea what price Bitcoin is right now. It's something like that will hit all the social media, that will hit the news, and it's going to bring a bunch of people into Bitcoin, and that will be something like that will be the top. That would be the exit liquidity that the whales need in order to get out. If you look at all 3 cycle tops the past 3 cycles, we know that these work in 4-year cycles. We know that we're entering the last year of this 4-year cycle. To the day, it's been some bullish positive catalyst that has marked the top of the market. And I don't see what we really have left. We already have the ETFs. Like, what bullishness could the market really chalk up to in order to get a whole bunch of new people? In my opinion, it's going to be something like that, some type of legislation that Trump's presidency puts in that's going to mark that top. So maybe not sell everything, but look to sell some of your position on some type of bullish news, such as what you just mentioned.
Interesting. What about you, Marshall? What do you got that you eyeball over there with your 38 billion of assets under management? Or I feel like a chump compared to you now.
No, not even. I'm learning a lot from you. So the 2 things that I've really been honing in on lately is one is the AI data center value chain. I've been crushing it since I found this really cool graphic that broke down all the different places in the data center. So some recent plays on that have been Dell, HPE, VRT. They do the cooling. And I like those companies. VRT, for example, is in 3 places in an AI data center. So you can make the argument that even if they get outcompeted in the cooling, for example, they're still going to make it in another part. And so I really like to be part of these companies that are going to be in this expansion. I think easily over the next 5 to 7 years, and this has already started. This isn't maybe going to happen. It's already happening. This data center expansion, there's going to be somewhere around $250 to $500 billion put into these things. Now, the real holdback is how are they going to power them? There's talks
They're
of
going to team up with Riot, baby.
yeah. Hey, there's a lot of talk of, even 3 Mile Island and things like that starting again, but those are not quick answers. So I played this in a lot of different ways by picking off good companies throughout the value chain. I got into the energy. We picked up a lot of SMR, NewScale, and Oklo. That's the Sam Altman backed SPAC. That I made a ton of money on. Actually got a negative cost basis in there. I got in there a few weeks ago at like $12 and change, sold puts all the way up. I mean, 15, 17, 20, 22
Look at this.
On Oklo. SMR did pretty well on as well, but they're a real company that has actual employees. Oklo is kind of scary. It's just 2 employees. And these things are a number of years out. They're a modular nuclear company. I really like that idea where you don't have to build your data center next to the plant that they want to restart. They'll kind of come to you and build a solution right on top of you. So that's been working really, really well, is following this AI data center value chain. You know, we can all argue whether AI is kind of a real thing, right? And what I mean by that is everybody's doing it, everybody's putting capex on it, but what are they actually making? You know, where's the return on this capex? Where's the monetization? And not everybody's going to have an LLM. So what are they doing with this? How are they going to make money on it? And but for now, I think that's why the Tesla event was so important. I know a lot of people kind of poo-pooed it or whatever, but you know, if they succeed, I think everybody succeeds. ChatGPT is cool, but it's kind of whatever. I mean, you kind of top out on what you could really do with it, and that's why companies like Palantir are so important, right? I mean, they're really bringing the connection between somebody's data and the AI, and actually making it work together. So that's been one thesis that's been really successful. I like the companies that make money. I, like you, like to see a positive PE, unless you're a new company and you're on the verge of profitability. I love that play. You know, getting in something that's not profitable but's almost there, like an Uber, you know, a couple of years ago or a year and a half ago.
But
The
I
other
guess
side,
going back to that
yeah,
negative PE with MicroStrategy, how would they ever get to a positive PE if they dilute and they use that money to buy Bitcoin and never sell the Bitcoin? Dilute, use the money to buy Bitcoin, never sell the Bitcoin. I'm just saying it feels
yeah,
very Ponzi-esque.
I'm with you. I don't
And
I
that's
don't
the
love
reason I
that.
just can't get it. Like my little Riot, my little beloved Riot, they mine Bitcoin. They're getting Bitcoin at a discount. It takes them about $35,000 to mine a Bitcoin that's currently selling in the open market for about 75,000. I see a path to profitability with them. They can get more efficient, more uptime with the miners, etc. Especially if they work out some sort of deal with their infrastructure for HPC AI. I see a path for them, but how does MicroStrategy ever make money when I feel like their whole business model is just to create shares out of thin air to go buy Bitcoin that they don't intend to sell anytime soon? So how does it work? I mean, explain to me how MicroStrategy works.
I mean, I think that comes back to why are you owning a company, and how are you comfortable making that decision, and not to knock anybody's investment thesis or, you know, being comfortable in a play, but I like a company that I understand what they do. For me, if I was going to buy MicroStrategy, I'm just going to buy Bitcoin. You know, like I'd just be long Bitcoin for me personally. I like to be in companies that I understand the play, and I think that for example, going back to the AI data center, being in the picks and shovels and the infrastructure of it all is probably better than trying to get a piece. I know we can't get OpenAI, that's private, but you know, would be better than doing that. Like, I don't want to be in the side that makes zero money, ton of outlay and cost. It's questionable what the service even is. I mean, I use ChatGPT every day, but again, I'm not sure that there's a real business model around there, although it's changing search and things. And so I don't know. I mean, again, not to knock your play, Samir. I mean, that's a cool company for sure, but I don't really personally understand it. And if I don't understand it and I can't wrap my head around it, I'm just going to look for something else that I do understand.
I hear you. Albert Jones, welcome to the channel. How are you?
I'm great, thanks.
Awesome. How long have you been following, and is there anything that we can help you with? What are you hoping to get out of this episode? Because I've got to get going here soon before the wife comes in here and unplug.
Well, basically, like everybody else, I'm having trouble managing Palantir
Okay.
and the covered calls, and got too aggressive, went too far out. But the only thing that is helping me is I'm really long, so I'm 2 to 1. On my owning my calls as far as that goes. Um, Wrote a couple puts, but I was asking about, is this thing ever coming down to earth? Are we going to see that 45 or 40? I mean, when I started, I'm thinking, I was looking at the chart, I'm going, well, 45, 46, and it looks like supports like 40 and a half. And so here I go, I'm starting, and then here it goes again, and I'm rolling, and then I says, well, I'm going to write the 50s, and then 3 days later, I'm underwater on those pretty good, But I have like uh, I own like 90 calls versus like 50 that I wrote, and I do have a few puts. I wrote some puts or sold some puts, let's say. But I was thinking, I mean, I was hearing you laugh about the chart, and you thought it's eventually going to come down, but it just doesn't look like it, does it?
Well, especially at these levels, what is there? It's never been at these levels. So what chart exactly is there to look at? I think that you need to get like a month of data at these levels to start formulating another base. I don't know. I just think that that's where it's tough
Well,
because there's
my idea
no
is,
resistance.
like everybody else, I mean, you don't sell your winners. So this thing, I think, is going to stay relatively in a smaller range through December, but I think when January hits, everybody's going to be saying, well, okay, I can sell now because I can book the profits into the next year, right? Because most people have a ton of gains this year already. They're trying to stay out of that higher bracket. Um, so I'm thinking January is your biggest chance for a major correction. Maybe I'm wrong, but that's my thoughts. How about anybody else? They kind of maybe think that. I mean, everybody sells their losers, right, in the late in the year, and holds their winners mostly.
Yeah, hedge funds actually do it this time of year, depending on when their fiscal year happens.
Right, right. In the November timeframe, in the like, no, I would think right now through like the 23rd or something, you would see people selling losers now, right?
Yeah, the one thing I can tell you about Palantir though, it is a very retail heavy stock, and that community is so cohesive that I think that there's like a sense of loyalty, and people don't want to sell because they want to continue to be part of this Palantir club, the Palantards. Uh, so I just think that it's going to have a lot of staying power and sticking power because institutions just started getting into it a year or two ago, and then like the S&P inclusion, that's whenever a lot of people just recently have owned this stock for what, less than 100 days or so. So
Right.
it's new to them, and they're off to a good start. I don't know, bro. I don't know.
Well, one thing I want to mention too, while Marshall's
There's
on the
always
call,
there's
is
always a
the
cycle, though, Albert. There's always a stock or two in the cycle that is extremely enigmatic. Like Tesla had its moment. What was it, like in 2020 when it
yeah.
started having its moment in the sun? It's running the sun, and I think Palantir is on that run. And it's one company that's in this space, this AI space, that legitimately makes money, and they have a utility about them. And it's man, it's a fucking monster, dude. Like, it's a monster, and
I
I
hear you.
and I don't know why it was so low for so long. The only thing that I could ever wrap my mind around was that fucking Alex Karp went on TV and then he claimed 30% CAGR, and they barely just got it now. So they
Right.
got punished for him kind of talking shit, boasting a little bit, and then it took forever to get the growth back in line. And then they learned how to sell the product, right, with the boot camps and the AIP cons or whatever the hell they're called. I just think that
One
tier just keeps getting better and better and better. So I always just look at the fundamentals, Albert. I don't get
Yeah.
stuck too much on price and trying to
Well,
make
yeah.
that.
Yeah. I just want to
Hey,
mention, is anybody really looked at miners that are using the extra data or the extra space to, you know, sell their space and host the extra space in there to make money? It looks like some of them are doing deals with, the to get that big electricity contracts at recent or decent prices, I should say. I read an article where there's 5 or 6 of them that are already hosting, besides doing their own mining, kind of supplementing, some of the cost that way. I was wondering if anybody kind of read that article or heard about those, Hut being one of them, BT, the symbol is another. There's
Digital.
about 4 or 5. I just picked up small positions just for the hell of it. But I was wondering if there anybody gone that route or looked into that.
Yeah, so I can speak on Riot because Jason
Yeah.
told. So I asked the question because I was like, "Hey, it feels like hosting's a money loser for you guys," and he says they're in litigation with companies. They inherited those hosting agreements whenever they bought out, I think, Windstone or another company, an engineering company. I'm not exactly sure how it happened, but Riot is stuck in these hosting agreements that aren't that good. The unit economics don't really work in that business for them, but it was like the hot thing when it was going on. So that is definitely something that they don't want to be a part of, but there are other companies because they don't have such low overhead. Like Riot has very low overhead because the cost of energy in Texas is very low. So Riot was very strategic, and then they bought hedges with ERCOT, so they know exactly how much their electricity is going to be, and then they're able to get credits with curtailment and stuff. So they're just in a totally different situation when it comes to that because they're like, we can't control the price of Bitcoin, we can't control the price of whatever, but we can control our costs. So they wanted to be able to put caps on their costs, and I think the other companies weren't that creative, so now they're having to look at other ways to kind of outsource the financial responsibilities because I think the biggest issue with all of the mining space for Bitcoin is they're all undercapitalized. Like to me, it would make sense for like a real big company that has real deep pockets to buy 1 or 2 or 3 of these miners and call it. Because then now that space would really, really grow. Investors would get really, really excited because they're like, these guys are already solvent. Now it's just a sector. It's kind of like Tesla. Imagine if Tesla had a Bitcoin mining arm. You're not worried about dilution anymore because they're adequately capitalized, So I feel like these miners are like my little $20,000-$25,000 account starting to wheel. It's hard.
Well, I think hosting for IA, is going to be big, big, big. And if you can get the electricity cheap, some of these miners that are going to be hosting this stuff, the margins are actually pretty good. If you've looked at Hut and Iron and Wolf, they're already hosting already, and I don't think I'm going to discount it quite yet. Because we'll see what happens, but I just dabbled in there a little bit and I'm going to do some more research. But so, all right, TJ, I know you're running late, buddy. I'll let you go. So wrap it up or whatever you need to do.
Appreciate you. Thank you so much, Albert, for coming on the channel.
Yeah.
Hey TJ, can you click that screen real quick
Which one?
at the bottom?
Hold on. Oh, here we go. This guy right here?
Yeah.
Okay, go ahead.
So can you so if anyone doesn't believe my previous statement, this right here is probably the most bullish thing that had ever happened to Bitcoin at the time, a US futures based ETF. If you zoom in on that date, October 19, 2021, if anyone's interested for a little homework, you look up October 19, 2021 on a Bitcoin chart and tell me what you see and tell me if you think they're not going to do that again. That's all I have to say. That's all I have to say.
Okay, hold on. I'm trying to figure out where we at. Oh, StreamYard. Okay. So I don't understand why I can't see. Give me a second, because I don't know why I can't zoom in on this thing.
Oh, I can probably do it.
Oh, you're the one sharing it. That's why. Okay. Okay, so October the 19th, 2021. So now let's go to Bitcoin. Because I want to show you something here on Bitcoin. It turns out that I'm not a hot. I learned something about myself today. I don't like holding assets I can't sell covered calls on. I sold all the Bitcoin today at 75 grand because I was like, dude, I could be bringing in a lot more money by buying BITX and then getting paid a dividend. If
And
I'm like,
it's not just 2021. You look at all the other cycles, same exact thing happened.
Yeah, but the compliance was not there, Dallas. So there is a lot of difference between 2019, 2016,
what
2021.
date are we looking at, guys? October what?
October 19, 2021.
So right in this area. So it's like 60. So what are we trying to do here, Dallas?
Just pull up a Bitcoin chart.
This is Bitcoin right here.
I don't see the. Okay, yeah. So just kind of move your cursor over that date.
So here's October. It's right in here. It's like 60. That's at 2021. So let's go again over here.
My point is that was the exact top of Bitcoin, and at that time, for that cycle, at that time, that was the most bullish thing that had ever happened to Bitcoin in Bitcoin's history. And that was the whale's exit liquidity. So what I'm saying is, some type of crypto regulation, some type of major event is going to happen in 2025, and that will mark the top.
Well,
That was the
I
FTX.
really didn't sell Bitcoin at the top, but I sold it because
And if
I
it
don't
doesn't,
own anything, bro. If I can't sell covered calls on it.
I'm bullish on that, but I want to clarify one thing. That was an FTX collapse that triggered the whole thing going down, and then there was no options for future, and also there was no futures on Bitcoin at that time. So things have changed. It's come a long way where it was in 2021 to now. So yes, it can go down. I'm not saying no. There's nobody knows the future, but the point is, it's things have changed dramatically,
I'm not
and
saying like for me, I'm not holding Bitcoin through the ups and downs. One guy I follow, he actually did the math, and it's actually contrary to popular belief. You're going to make more money even with taxes by compounding the cycles. So obviously, you have to pay way more attention. But there are clear and obvious indicators of near tops and and getting close to the bottom as well. And if you're able to buy and sell, because these are if 2025 does not give us a top, that means Bitcoin's no longer following a 4-year cycle, which is definitely possible. But it's one of those things where when it does it 3 times in a row, you should probably go with that theory until that theory is broken. And again, it depends how much money you have in it. If you've got $1,000 in it and you're just DCAing into Bitcoin, yeah, just hold, because the past 3 cycles, Bitcoin has never been lower in its history on election day, which was yesterday. So if that holds as well, that means like 70,000 is pretty much the lowest Bitcoin will ever go. I don't believe that. I think it's going to go back below 70, but that's been what is happening in the past 3 cycles. So FTX was actually the bottom of this past cycle. And so there will be, I promise you, there will be market manipulation. Some type of extremely bullish event's going to happen in 2025, and that will be the top. If it's not, then we're going against the trend. But if you have life-changing money on the line, and you think because we now have ETFs that those ETFs are not going to sell on you and dump on you, then you're just crazy.
so with Fidelity and BlackRock having 500,000 bitcoins together, if they do, then and they have their own ETFs a part of embedded in that. So it's not just it was not as part of 2021 though. So there is a lot more riding this time than just the Bitcoin price here.
Dude, I think Bitcoin's going to the moon. I'm the Bitcoin resident bull on this podcast. Trust me. Nobody has more. No one's has more allocated to crypto specifically on this. Well, I don't know about the new people on the channel, but the people who have been on here than me as far as pure Bitcoin plays. So I hope it goes to 200.
I have a Bitcoin proxy, but that's different. I get it.
Yeah, I'm talking about pure crypto plays. No one's in the weeds more than I am on this particular podcast. So I've been doing a lot of studying, dude, because this particular 2025, particularly quarter one, which a lot of people think could also be the top because this 4-year cycle is early because of the ETFs. Bitcoin hit its all-time high a little bit early. A lot of people think actually quarter one we could see an all-time or a top for this cycle. But I won't be around to see the bottom because I will definitely be selling.
Yeah. So anyway, but I just want to add one thing before I drop out. So from the MSTR perspective, TJ,
Yeah.
MSTR owns 1% of overall Bitcoin supply of 21 million. That's 252,500 Bitcoin. And that's unrealized gain that's capitalized is what backing it up for the stock. Now they can dilute like any other company, which is legitimate and it's within the legal realm. So, and that's what if you hear out Michael Saylor on one of these last interviews, fantastically covered every single one of the questions around it. Now, if you're bullish on Bitcoin, then you're bullish on MSTR. If you're not bullish on Bitcoin, then it's a totally different topic. But if you're bullish on Bitcoin, it's easier for, especially when it comes to IRAs and it comes to your retirement accounts. I can go and buy Bitcoin, as Marshall was saying. If it's in my regular account, yes, I can go ahead and buy it. But in my retirement accounts, I can go and buy MSTR, where I get exposure to Bitcoin, and I can play with that compared to this one. And I don't need to worry about cold storage. I need to worry about maintenance. I don't need to worry about getting stolen. So there are a lot of reasons why people go for MSTR, but there is significant unrealized gain because MSTR has a Bitcoin on average of less than 30,000, I believe, and it's already doubled. And with the new FASB rules, they haven't been accounting according to the new FASB rules. So if that FASB rules kicks in, the reason why the PE is negative is because the profit of $15 billion worth of company value, when it comes to Bitcoin accounting, it's more than 45 billion. So there is something which I don't clearly know how to articulate that, but it's 3x times of the Bitcoin value is embedded in the company. So basically, the stock is undervalued.
Interesting, man. Interesting. Can I show you all something real quickly? I was just looking at this right now. So the portfolio, obviously, the Trump bump is like a real thing right now. And then I was looking at these positions, and I want to, like, sometime in 2026, 2025, I only want to have 10. So I've got these guys right here. I feel like BITX and TSOL will no longer be in the portfolios at some point. I want to get them called away intentionally because I'm trying to free up capital to sell more cash traps because I want to live over there in cash secured puts because that grows your balance incrementally, and it's like real because it's realized gains versus unrealized gains. Because all these stocks going up, down, and sideways, it's cool, but it doesn't really produce cash flow. But what do y'all think? Because my thoughts are to eventually get BITX and TSLL out of the portfolio. And then I want to maybe try to graduate Crowd and NVIDIA up if I'm able to do so. If not, essentially from this point down, none of that will be in the portfolio as far as like share ownership along with BITX. So it's quite a bit of money, probably in the neighborhood of $1 million or so, or approaching it. And that would give me a much larger cash balance over here because I want to have like $3 million in cash secured puts expiring like every month, if not sooner. And then I've got the backstop trade, which is this TSLL. If I could find it, I've got this backstop trade right here that is already starting to perform very well. I tied up the 2,500. This what is it? 573, $2,500. It's like 1.4 million or something crazy. and got about $330,000 in premiums. So if I can get to like 50%, then there's like way more than 50% left on the clock. I may consider closing that out, and that frees up a lot more capital as well. And then I may just try to cash grab for the most part the rest of the year, because I don't want to own any more shares. Because what I'm trying to figure out now is, how do I minimize the drawdown? Because if you look at this freaking chart, dude, it's tough to deal with at times. Like these little things right here, like these things, they doesn't look like that big of a deal when you look at it like that, but when you're going through it, it fucking sucks. You know what I mean? And then I've had several of those when, since I started early on. You can see the trajectory was down because I was, behind Geo, Sands, PaySafe, IDEX, just a bunch of garbage, right? And then I was like, hey, well, let's introduce Google or Tesla or something to the matrix. And that's when things started going up. But I've still had some pretty massive drawdowns along the way. And I was looking at Invest with Henry's chart, and he's just like a lot more steady. He doesn't have like a lot of these drawdowns, but I also noticed that he typically doesn't own a lot of shares unless it's like Apple or something like that. Like he doesn't get caught in a lot of share ownership. So I was just wondering if I should take, a little bit of a page from him, or if I should just stick to my guns, sell put, sell calls. I do it on high growth. I have to ride the ebbs and flows and not worry so much about how pretty the chart is, because I'm here for another double in the next, 3 to 5 years. So I make sure that I'm beating the market. So I told myself that I was going to have this evaluation with myself when I got to this mark. So I just, like, if y'all can indulge me for 5 minutes and get your feedback. Should I just stay the course, or should I just do what's been working?
I like what you're doing. I mean, I think what you're doing is definitely working. I've started to adopt it into my own strategies. And like I said, the thing that I've really taken from you recently is um, less plays, not trying to go after, like I gave you the example on the guy had it on Hershey. I'm not interested in 2%. I'm not trying to get greedy or whatever, but that's just not worth my time. Um, we really are researching these companies a lot before we get in. The one thing I did hear that I don't necessarily agree with a ways back was, if you don't want to lose a company, then maybe don't sell covered calls. I'm with you. I love that fighting gravity thing that you said. It's so comfortable selling puts. But when you're selling calls, it feels like, there's this fight. I told you I have one client. She has a big concentrated position in Nvidia. She's up 99% on this thing, cost basis of like $3 and change. And we can't lose it, but it's also worth over $2.5 million, just this position. And so, do I just let it sit there and use the leverage in the margin buying power to create income? I do that for sure. But if I'm not doing something on Nvidia, then I'm really leaving a lot to be desired, and I'm leaving a lot of meat on the table. And I don't want to do that. So I'm researching it heavily. I'm watching it. I can't let it get called away. Absolutely not, because I'd get killed on the taxes for the client. But I'm still doing it. I'm still selling covered calls, and we're just playing the game. I mean, even today we were looking in the trading zone. It hit a new high, 144.63. We were looking at it intraday at 144.63, fell back down to its all-time high. And I was talking with my analyst, and she's going, "Hey, if it blows through that, it's going to go way higher." And we're trying to get it before earnings. So I've been playing this game where I've been selling covered calls that expire on the 15th because I think they have earnings on the 20th.
Yeah.
And, it's been working, and I've been taking, the small profits along the way. So I did this when it was in that trading zone of kind of 137 to 144 for the last like 2 weeks. I know it dropped below that last week, kind of in the lower 130s, but I was selling the 155s, the 160s, bottom back. I did that twice and was able on these. She's got 18,200 shares collect a total after buybacks. My net was about $30,000 in premiums.
Yeah.
I mean, that's legit money. And so it's worth putting in the extra work and really knowing what's going on and being comfortable in there. And again, I'm not losing the stock. That's not an option for us. But to leave that money on the table and just go, well, I'll just use the buying power and create opportunities. That's not enough. I mean, it's good, but it's not enough. If we're gonna own these things, gotta get comfortable with the uncomfortable part of potentially losing it, not lose it, and figure out how to play that game. So that's kind of what I'm doing.
Yeah, because I have a position on NVIDIA, and I recently rolled these covered calls from 130 to 134, and I was like, I mean, dude, I don't have like the best entry point or anything, so it's a position I'm not comfortable building because I don't have a built-in 2x or 3x, right?
Sure.
And I'm like, nobody wants to like buy at the top, so to speak. So I'm kind of like indifferent. I'm like, dude, if the market gets me in a situation, I could roll it another month and add another $2 or $3 or $4 and keep playing that game. But I'm not willing to kick the can down the road that much because I don't like my entry point. So I'm like, I want to reserve the right to be able to sell it for a profit and then get into more liquidity, right? And get into more cash.
So TJ, why isn't it an option? And this is what I've done in positions like this, specifically with NVIDIA. But if you feel like it's expensive or you don't have a big position, let's say buy the stock, right? So buy the stock today, you sell your covered calls, higher point, create some extra money. If you go out far on NVIDIA, like look at January 2026, look at 2027, they'll pay you a ton of money. I just closed out my calls, or I'm sorry, my puts in 2026 and 2027. I had them in I had a bunch of laddered stuff, 95, 90, 85, and I got those over the last month, but they're up 30%. So it's like if I've got,
Sure.
15 months or more than that, and I'm up 30%, I'm going to take that. I know you've been saying, hey, if you don't have a place to put the money, just kind of ride it out. But for me, um, if I can get in 1 month, a quarter of the premium, I'm going to take that money all day, use my buying power and keep extending it. But I figure I'm just chipping away at that price. So even if you bought today, and I'm kind of trying to talk myself into this on Palantir, because it does have a loyal following and it just seems to be going straight up. But um, I like buying the stock. You sell the covered call. If it gets called away, hey, you made, whatever, 15% or 20% wherever you sold it at. But selling those puts with the buying power. And if you go far out, it's like the market's saying, hey, we don't know where this thing's going to go in 2 years. And I'm going, I know because I researched the company. Like I'm comfortable that NVIDIA dipped last time on earnings because there was uncertainty around the deployment of Blackwell. Blackwell was delayed. TSMC hadn't caught up. Now they're going to knock it out of the freaking park with Blackwell. And they had re-guided on the previous 6 earnings calls, reforecasted, and the market loved that. Even though their numbers were great last time, they weren't able to re-guide higher and get everybody excited. I think that's going to change this time. And I think that they're a stalwart. There's nobody else coming in to eat their lunch. Yeah, you can make other chips and do other things, but the path forward in all things AI go through NVIDIA. So, if you like that stock, you can chip away big time at those premiums if you go out far enough. And I like that play and I'm comfortable with those margin debits. And I don't intend to hold on to, or I'm sorry, the buying power debit. I don't intend to hold them for a year and a half or 2 years. I intend to get out of them as soon as I've run up 20 or 30%. And then when the stock dips back down, then I'll sell them again, and I'll play that game. And I like going out far, even though I don't intend to let those dates come into play.
Right. So let's talk about this one, guys, and let's end it on this one. This could be a real good teaching segment. So this is the largest cash and put that I've ever done for a backstop trade. This is where I saw on the distance, huge position. Don't recommend it for a lot of people, but it's the cornerstone of my strategy. And I like using all of those premiums and selling short dated cash secure puts. And then when I look at how I did with that portion of the portfolio, I end up getting 30, 40, sometimes 50% a year, cash on cash returns. So I want to see what you would do. Close or not to close? That's the question. Okay. So just to set up, it is a position here where there's 1.432500 in collateral. I own shares of TSO. This is a leverage play on Tesla, 2 times leverage ETF. So I'm up pretty well on those shares. I've got them all for sale at 15 for 12.20. So those are getting challenged right now because this thing went up a crazy amount of money today, right? A crazy percentage, 29%. But I've also got 2,500 cash secure puts at 573 that I collected like 330,000 or 350,000 on. And then I also have long calls for January that I intend to exercise probably November, December of this coming year. But the question at hand is this one here is performing a lot better, a lot sooner. So do you just leave a good trade on that's real easy, that's not causing any stress? Because the math says, dude, you could lock in a $50,000 win and free up 1.4, not be in harm's way, or you're like, dude, 573 would be an absolute joke. I'd love to give most of my buying power that's in brokerage cash to own these shares at 573 and then just turn around and try to sell them at like $7 or $8 and get all that capital appreciation as well. How do you deal with it? Because in my journal, when I put this on, what I said to myself was, if I can get to 50% and there's over like 60% of the time left on the contract, I'm going to close out. But I didn't have anything for getting to 14, 15% this early on. Only been in this trade since 926. So how would y'all approach this one? Because I feel like right now it looks good. We're off on the right track. We're off on the right foot. But I feel like I don't have to do anything here because I went in this thing trying to get 150 grand or 200 grand. You know what I mean? 40 grand. And this has been easy money, but I feel like all of this is going to be easy money because this is very favorable because of the Trump trade. So let's start with Dallas. How would you manage it if it was your situation, Dallas?
I would let it go. I would take 33%, 1/3 of the contracts off at 300, and then I would let the rest go.
So I'm sorry. What you take 1/3 off of what now?
If Tesla goes to $300,
Yeah, but this is on TSLL, which is obviously
same difference.
Okay. So percentage-wise, talk to me. Like, what are you doing? What are you hoping to capture here?
I mean, if you're coming up on if Tesla comes up to the 300 level, I think that's when you get another dip. So it's worth taking 1/3 of the position off. But I do think that dip will get quickly bought up. So I think you just hold because you're only up 14%. So right now, there's nothing to do. But if Tesla goes right now from the 280s to 300, what do you think if you do that, how you can project? Can you project the news?
Yeah. So I have a simulation here. Like I have this thing right here.
Yeah, do that.
Let's say this thing goes up to $20, say, because that's probably about where it would be if Tesla did that. And again, this is just our estimations, right? And then we're talking about doing that here within the next, say by December the 20th.
Yeah.
Now that's different, right? Because I'm collecting a big chunk. At that point, it's like, hey, lock in the freaking win, free up all the money, go into 2025 with all of this buying power and a little bit of a modified game plan.
Yeah.
If it did that.
It's not any different than handling any other casket put. It just feels that way because it's such a big position. I mean,
Right.
if you were up on something else 14%, you wouldn't be thinking twice about it.
Yeah.
Nothing to do right now.
Yeah, agreed. What about you, Samir? You're in this situation with TSLL. How are you feeling about it? How are you handling it? Or you're just like, shit, I wish I had more contracts because I didn't know the money was going to be this easy. Because I'll be honest with y'all, whenever I put this on, I was like, it feels like I'm stealing money. Like I literally feel like I went on a $330,000 heist. I'm gonna get away with it. You got to park your money here like a CD, right, for a year and a half or whatever it is.
Yeah.
But I'm like, dude, this is crazy, yo. Like, I can't believe people are paying this much money to tie up the money for 15, 16 months. And then I'm getting paid all of that money up front for agreeing to buy this shit at 573, leverage, no leverage, Tesla, Navi, Rogen. I don't give a shit. Like 573, bro. Tesla would have to be at like probably like 140 or 150 for this thing to be challenged mathematically.
Yeah. No, knowing the new presidency coming in and bullishness with Elon Musk controlling all the three branches of the government, and the way things gonna shape up, I would be very bullish on Tesla to go more than 300 for sure. I wouldn't do anything unless and until I really need the cash, and and I want to collect at least 70% premium before I exit the trade.
Because it's such easy money, right? And you're like, oh shit, now I gotta go work and I gotta go find the trade and stuff. So I see that point. What
Yes,
about Marshall Law Media, also known as Vince Vaughn, according to Dallas Matthews?
All right.
Hold on, let's zoom in on this mug of yours. Hold on. Hold on. Holy shit, bro. Hit me with the you're so money from swingers. Hit us with the you're so money from swingers.
You're so money, you don't even know it.
Yeah.
Yeah. All right.
The fact that you even knew it, bro. You were here, now you in here.
All right, awesome. So I guess I'll be the dissenting opinion here, and I love Tesla. Let me just say that in full disclosure. I mean, everybody in my office constantly tells me to stop talking about Tesla. All I talk about is Tesla almost all day, every day. Love Elon. I think he's great. Um, so here's some headwinds. What you said, Samir, is right. I mean, like everybody thinks like it's going to be bullish for Tesla Trump presidency. Here's a couple of things. Remember, the street hates this guy, right? I mean, they love fading Tesla. So there is going to be talk about his time being the head of Department of Government Efficiency, which, if you looked at Doge performance yesterday, Dogecoin, it
Yeah.
crushed it yesterday. It was the top performing, top 20 coin in terms of performance, did really well. So there'll be all the people saying that, his time's too divided. They'll want to fade him for that reason. Secondly, and this one's a little more kind of realistic for everybody to get on board with, is likely these EV tax credits are going away. And Elon has always said he doesn't need them. He famously is putting pricing pressure on everybody because he has the margin to do it, right? I mean, they're the only company that actually makes any money. So they can do that. But, that's a big deal. This is going to be going away under Trump presidency, likely. That's not going to be great for the stock. The things that people are saying that are going to be good for Tesla are the fact that in a regulatory environment, maybe they can push through FSD a little bit more quickly. I agree with that. It's going to take some time though. And remember, they're not ready to roll out Cybercab yet. That's going to be a while. He's even saying 2026 before the end of the year, although they're starting to try it. I have a 2018 Model 3, so I don't have the right hardware to do full SFD, full self driving. But my wife has a 2023 Model Y. We went to trick or treat at the church on Halloween and got out of the neighborhood. And I was driving her car and I put on the destination. I said, navigate to Cavalry Chapel, and then just threw it in self driving. It made every turn, it did everything. It was straight money. Like from the time I pulled out of my driveway till the time it pulled in the driveway there, it's way better than people think. But again, it's going to take some time for the regulatory environment to get there. So you're 1 month in to a 15-month trade and you're up 13%. Man, I'm taking that money because this thing's not going in a straight line. Like for sure, sometime around the first of the year, all the haters are going to come in on Tesla again, and that thing's going to pull back and fill that gap, whatever you think that gap is, right? I mean, you guys can do your own technical analysis, but I feel like you could pick up you could bank the money now, get your buying power back, and make that same trade 3 months from now and probably get paid the same premium or better. So
Yeah,
for me, that's what I'm
I
doing.
did that on CleanSpark, where I was into the trade like 40 days and I was up like 40%. There was still like a year left, and I got back into the trade twice and made all the money back.
You got to take it. I mean, for me, like again, if you've I'll, like usually if I get around 75 or 80%, I'm kind of looking to get out. But like you said, if something's closing out in a week or two or three, and you're right there, it's like you're looking at it going, okay, it's cost me $1,500, $2,500 to buy this back. Why not just make yourself 1,500 or 2,500 bucks and stay in it? But in this case, they're so far out
Yeah.
that you are, I don't know, statistically, I feel like you can't make as much money as you've made in the time that you've made it in already. You've already kind of crossed over that point. Take your money, get in a new trade when this thing pulls back. Because this is a volatile stock. I mean,
Yeah. Big
yep.
time. Big time. And then like that BITX, dude, like owning those shares. Dude, I didn't know that divvy was so crazy, dude. Like that's like a whole different animal. And shout out to Dallas for bringing that one to my attention from that aspect, because the trade happened on a Mitts channel because of a guy named Adam. But then Dallas did like a real extensive reasoning on his channel as to why he was choosing BITX over the miners, because you don't have to deal with earnings and all that other shit. And then now there's a dividend on top of the premiums just as juicy as the miners. And I was like, dang, dude, like it's hard to argue with some of that logic, and there's no dilution, anything of the sort.
Sure. I keep stacking Tesla long term. I mean, I'm a big believer in, I think this is probably the soonest 2 years out, maybe the longest 3 or 4, maybe 5 years out, they're going to turn on a dividend.
Yeah,
Remember, Elon is the brokest rich guy in the world, right? I mean, he's got no money.
yeah,
He bought Twitter. He did all these things. He's got no cash, but he's got a ton of stock. And I think that they're going to turn on a dividend somewhere 2, 3, 4, 5 years down the road. And that's going to pay for all the things that he wants to do. He doesn't really want to take SpaceX public. He'd rather keep it private, but he needs cash. And this is going to turn into, and they have a ton of money all the time. They make money. So I really like stacking Tesla, but I love your play. Whatever you decide to do, I like it.
awesome, man. Appreciate it. Well, guys, I gotta get rocking and rolling. Marriage duty calls. I don't have timestamps on it because I just didn't keep up with it, so I'll watch it in 1.75 and put them on after if there's anything that you guys want to watch after, and hopefully Alex will be able to clip some of this stuff as well. Guys, we are making progress on the book, by the way. Just a real quick thing. I put on these seminars so that artificial intelligence could help me like get some cohesive thoughts on paper, and then I'm gonna like try to like personalize them and probably screw it all up grammatically. So, but I think that it's kind of like really turning into something. And I think that when I put more meat and potatoes into it with the next seminar, and hopefully I can get Dallas and others to chime in to help me to make sure that we're putting in the right information. I think that we could have a legit finished product by the first part of next year, and I will be promoting it. I have a goal. I have a goal to sell 5,000 copies, legit sell 5,000 copies, not like just like bribe people to take the book or whatever. But it's
I'm
gonna
gonna
take me a while to do that, but it's got to be a good product. If not, I'm putting my name on it, right? So it's got to be a good product, and I'm hoping that we can sell 5,000 hard. I'm talking about like an actual book, not like just the ebook. That's all cool, but I'm talking about like hard copy that I personally autograph for everyone.
I'm
And
gonna
it's,
get
and it's
few of
saying,
them.
"Hey, kitty ass chicken scratch, make your sky stay blue, stock screen." So I got to practice that because I'm like a doctor, dude. I think real fast, but the hand don't work, so it's hard for me to get it out there. But anyway, I sent some of it to Dallas. Hopefully, he has a chance to look it over. I put thought into it, and this artificial intelligence, dude, it really transcribes your words. It's pretty awesome. Pretty awesome.
TJ, you're gonna add a chapter on taxes too, right? Hopefully.
Definitely talk about it. And guys, taxes are taxed as ordinary income on
No,
option.
not the tax itself. I'm talking about any strategies that you can get CPA vetted topics on that would really help that book to go for.
Awesome. Yeah, I'm definitely going to be reaching out. Like I'll be giving sneak peeks to like 5 people or so and asking them before I like put out the final version to see like what can we add to like really finish it up. Because I wanted to become like the Bible of wheeling. That's like the idea of wheeling as a business, right? Like as a business, and now we're not all just going for the portfolio growth, but you like legitimately wanted to treat this like your hamburger stand. You got to live off of that hamburger stand. It has to produce cash flow as well. So how do you find that balance? Because that's what I've been doing for the last 4 years, trying to find that balance, and it's not easy. It's not easy because one day I am going to have to live off of the portfolio. So now I'm going to have to like come up with rules. Okay, like okay, cool. I collect $250,000 a month in premium. How much of that am I comfortable taking out, knowing that I'm only going to capture like 125, 145? You know what I'm saying? So there's a lot of other things to consider. And then next year it's going to be real fun because whatever the number is, because now it's like trying to prove the theories that, because a lot of it's still theoretical because I haven't lived it out yet, right? But I've been hitting this 25% metric, but you guys haven't followed it like that because I haven't promoted it that way. So next year, the scoreboard's going to be, we're all going to know what the portfolio was January the 2nd or 3rd when it's the first trading day. And my whole mission is to bring 25% of captured premium through the door the entire year. Because that's the only metric that I claim that I can control, right? So let's see how close I can get to that metric. And if the portfolio organically does very well because the underlying's performed, well, that's great. And that's why I'm trying to build a real big cash position to have enough firepower for these big cash drops, cash and puts, because I'm not really trying to take ownership of too many more shares, guys. It is just kind of the point where it's like, you stay up a little bit at night. And you're like, oh, fuck, dude. I mean, Riot goes down $4 tomorrow. Oh, that's crazy. You know what I'm saying? Like that is 450 grand. But at the same time, when it goes up, it feels real good too. But it's just like, man, like you want to take some of that beta off the portfolio a little bit. And the only way to do that is maybe not own as many shares and then just go grab your money with the cash and good puts. It's tough, man. It's tough. Again, I mean, y'all are witnessing me learning and growing and still trying to get better at my craft. So if I'm at a pretty, reasonably high level or medium to high level, and I'm still constantly trying to figure it out, ask yourself where you're at in your journey. You know what I mean? So there's a lot to learn. Like we always have to learn and we always have to grow. I think that's what life is. Yeah, Alex, any last words, my man? Let's go around the room and call it good.
Yeah, just really quickly, I can't remember if it was Vince Vaughn who mentioned it or someone else, but I can confirm that 3 Mile Island is reopening. I work for Constellation Energy, which is they own the nuclear power plants. It's not like insider; it's been put out, but they're selling 100% of that power to Microsoft to run their data centers, which is pretty incredible. But yeah, 3 Mile Island is will reopen.
I think that was the angel gentleman. That's it.
No, I mentioned that.
That was you? Okay.
Yeah,
I thought
yeah,
it was
yeah.
Vince.
Yeah, I did hear Kevin O'Leary say that he's pretty tapped in, Mr. Wonderful, and he had mentioned that the other day on one of the shows, and he said, "Look, it's going to be a decade before anybody pulls any energy out of that." And he was convinced. He's like, anybody that thinks differently doesn't really know, understand the landscape and this and that. I don't know enough to know how quickly they can get those things going. I did think it was interesting that seemed to be an issue that covered both sides of the political landscape. Republicans and Democrats were both on that because they realize how much energy we actually need for these data centers. In a high end or at scale, it's more than we currently produce for the entire United States at the high end. So it's pretty interesting, but I don't know how quickly that's going to get going. I don't know if you have any inside, uh, not insider information, but any kind of additional information on that.
No, I don't. I don't know, but I know that nuclear is definitely going to have a massive part of our future.
For sure.
And you know, I work at the only plant in Maryland, and our plant provides like I think it's like 25% of all of Maryland's power from one nuke plant. So it's pretty incredible to actually see the inside of a nuke plant. It's mind blowing, absolutely mind blowing.
It's fantastic technology. I mean, even Elon, a lot of people think, he's against all these sorts of things, and he's not. I mean, everybody I think is down for nuclear. I live now in Nevada, but I'm from Virginia originally, not too far away from you. And they famously have Yucca Mountain here, and all the spent rods are sitting on a train somewhere, in the middle of the state. Nobody knows, but I think through the deregulation that's coming, that'll be one of the big things to kind of get excited about. So,
Yeah.
Dude, Dogecoin's mooning, bro. I just got a notification on one of the clients' phones. It's at 12%.
Dude, I'm actually pretty surprised that Bitcoin's not significantly higher. I thought it would have broken the 80s by now, but you could see very clearly in real time, like crypto spiking as like the betting markets were projecting Trump to win. But yeah, Bitcoin's definitely going to do some crazy things by the end of the year, in my opinion.
Yeah.
Well, I want $250. Chris Patel cash out me $250 on the Trump victory, and this has already been a very lucrative presidency for me.
I cashed it out.
$250 than the 10 milli, bro.
I actually I put in a bet. I don't know if you saw my video, but I put in a bet on Kamala because I think anytime you have someone,
you wanted Trump to win, but you were just kind of like you were kind of it's almost like a hedge, if you will.
well, it's absolutely a hedge. I mean, I voted for Trump, but when you have a significant portion of your portfolio towards not only, I mean, a significant portion of my net worth is not only in crypto, but in Tesla and other things that are projected to do well under Trump. So betting on a Kamala victory is the purest hedge you could possibly have for that particular binary event. You could like have, when I put the hedge on, it was like a 3x, like 300% gain if she would have won. So I was more than happy to lose that hedge because what the portfolio has done since in the past 24 hours is pretty incredible.
How's everybody year to date? Are y'all crushing it also? I like this kind of like surprised me because, well, I mean, you deal with bigger numbers than I do, Marshall, but like, did I feel like it's easier for me to grow a smaller account than it is the big Robinhood account for me for whatever reasons? And I don't know if that's just because I feel like it's just supposed to be math, right? And I'm doing essentially the same types of plays, but maybe there is something that subconsciously I'm doing that's more conservative because my son's account's like up like 80%, but he's only got so far in right, So I'm just like, I don't know, but I see some portfolios, dude, they're up like 600-700% for the year. And I'm like, dude, what are y'all doing? Just buying a bunch of calls? Like, this is just fucking crazy.
It's easier to do. You take a couple zeros and a comma off the number, and it's a lot easier to hit those big numbers, right? You just got to be more respectful of the large balance because you work so hard to get it there. You can't see a 50 or 60 or 70% swing. Not that you want to see that on a smaller account, but that's kind of built in. It's like I'm starting low, which either means I'm new and I'm young and I've got a lot of years to make this up, or I need to hit a home run anyway because this is kind of all I've got, and so I just want to do something bigger. So I think that's normal. Since I found you and started listening to you and applying these tactics to my own trading, which was really in August, like I said, I'm up over 25%, it's like 27% on our portfolio since August, which I'm really proud of, and that's not taking a lot of chances or big risks as you might think. It's companies I'm comfortable with, good quality companies that I don't mind owning. I do own them, I strangle them, and kind of rinse and repeat. And now I'm starting to take bigger position. When I first started, I was like, I want to max out at 1%, weight, but now I'm starting at 1.5 or 2%. I'm selling puts, which would be another 1%, 1.5, 2%. I'm kind of maxing out in that 4 to 5% range, which is good. It's just less companies to have to get involved with and make calls on.
Sure.
But it's working out really, really well. So, steady is the course for sure. But I'm really proud of that 25% number, and that's largely been because of the tactics that I'm learning here and kind of honing through my own trades. But definitely heard about them by you talking about them and going, shit, I could do this, and it works. It really works.
This is just a sneak peek into some of the shit that's on the tracker now. Like Bill has this investor overview tab, and it's it's got like your market value, the cost. This is what you pay for the shares, what they're worth. What you paid for the leaps, what they're worth. I don't have the right metrics here. This is what I collected on the puts and calls outstanding. I don't have a metric for what they're worth because I have to literally go through the brokerage, the individual cash, the cash secured put collateral, and then he gives you how it all adds up to 100%. So you can really see where you're at with the portfolio. And I don't want to be over 55. I don't want to be over 50% on share ownership. So right away it tells me, boom, 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 I got to get rid of some shares. You know what I mean? And I want to have a majority of the rest of the stuff over here in cash secured puts. I think that's probably the max that I want to have on leaps. You know what I mean? So like, yeah, you're able to look at these metrics a different way. And then also it just seems like so the covered calls is obviously, accounting for something, the premiums, but the reason that the puts is going to be so high is because he's taking into consideration the cash secured put collateral. But then it also shows like if you're tapping into margin, like because the brokerage cash is over here, but I've got this much in cash secured put collateral. So this is like potentially how much we would be using in margin if everything got put in the money. And then this is total premiums collected and buybacks. I mean, this little metric's absolutely sick, dude. It's like the ultimate snapshot for the portfolio. So track your trades, man. That's like what I'll leave you guys with is know exactly where you're at, especially somebody like Marshall, who is, is managing bigger money than I deal with. You got to know where you stand because when push comes to shove and you have to make a decision real quickly, you want to make sure that you're selling the right companies and the right situations, and you got to look at all your tax implications and everything. There's just a lot to consider, and you don't want to deal when like your blood pressure is real high. So it's real easy when you have numbers that you can like fall back on and be like, okay, I really don't want to sell 50,000 shares of Riot, but I'm up so big on this fucking position. It makes sense because, Amazon's down at $100 now. I have to do the right thing for my family long term. So but if you don't have those metrics, you'll never know to be able to, to make those decisions as an example. Anyway, guys, I gotta get rolling, man. Appreciate you guys so much. This is TJ the Wheel Deal signing off with Dallas. Check out his page, Exploring Options. Dallas, get with me. Let's do the interview on your channel, brother. And then Samir, appreciate you so much for your contributions. Hopefully you got some value on the covered calls. And Marshall, my man, you're welcome anytime, brother. You're so fucking money, you don't even know it.
Thank you.
TJ the Wheel Deal signing off as always. May your sky stay blue, stock screen. Peace out. God bless you guys.